Good morning, and welcome back to another episode of the Matt Kohrs Show, where we're starting a wee bit early today because in a mere 40 seconds, we're going to be getting the CPI report. So that's why we're starting early. And wait, did someone release it? I just saw a massive move in the market, but it doesn't really make sense why there was a massive. We just popped and it was early. I'm checking the time. Someone might know a little something. What is this pop? The report is not out yet. It's not supposed to be out yet. All right. Well, we're going to be finding out very, very shortly.
AI hardware names is up.
What's it going to be?
More than 0.5%. Treasuries going into that inflation print. Relatively
if this is a beat, someone knew.
Recently, 10-year under 465 right now. The
down. They reverse it. The old razzle dazzle from 960 to how bad was it?
Once they break, and Rick talk about the stakes and the market setup ahead of them.
Something weird just happened. Came in at expectation. Hit expectation. Not hot, not cold, right at expectation.
September meeting. And on the foreign exchange
Here's our boy Rick. Here's our beautiful leader Rick.
And here we go, 7:30, 8:30 Eastern, July CPI hitting the wires.
Wow, they reversed that. What the hell? There was a weird run up into it.
In the rearview mirror, as of this point, still unrevised, down 0.4%, was a massive drop for June.
Wow.
If we take out food and energy, up 0.2, exactly as expected. And if we take a year-over-year perspective, a headline year-over-year up 3.4, exactly as expected. That follows 3.5. 3.4 would be the lightest since March when we were 3.3. And in my opinion, maybe the most important number is the CPI year-over-year core. Expected 2.5.
Golly.
And it arrives at 2.5. That follows 2.6.
We're
so
right
we
at the point of control,
February,
which is around
June,
8:35.
July, all at 2.5. We haven't been below 2.5 since March of 21 when we were at 1.6. Now, I always like to take a very close look at what's going on in the actual indices. On the CPI main indice created in 1913, it comes in at 333.91, which is actually not a new all-time high, which is a good thing. In the rearview mirror, the May read was 335. That's the all-time high. So we're actually moving down a bit on the index. That's good news. Now, if we look at the index on a core basis, it comes in at 336.78, and that is a new all-time high on that indice. We see that interest rates have moved up just a little bit. We're now at 466.5, so we're up about a basis point and a half, which makes us down a couple on the session. And 2 years at 420, also up a couple basis points. They went from down 4 to down 2 basis points. Even though the market was expecting these numbers, in my opinion, we could still make the claim that we're not quite at the 2% level, Fed's objective, and of course the AI and related issues, especially on issuance, really questioning the costs and the inflation implications of what the AI build-out may have in store for us in the future. Mike, back to you.
Absolutely, a massive swing factor there in the whole outlook. Rick, stick with us. Steve Leisman joins us now with more, Steve. So relatively muted market reaction, but yields back up slightly.
Yeah, I'm interested in that, but just give me some of the details here. First of all, the big story is energy, right? Energy down 1.5%. Answering a question Brian asked earlier, 2.9% month-on-month decline in gasoline. We'll see if that lasts. I don't think it will. I think it's got to come back in the month of August when we get that data in September. Food at home, that was down. It was up just 0.1%, actually better than the last month. And food away from home up 0.3. That's a little worse. Not sure why the burger and the beer at the restaurant is going to cost you a little more, but it is. We were watching, always watching shelter. That has been a big help when I look at overall shelter up just 0.1%. Although, hang on, I'm just looking at this owner's equivalent rent up 0.3, so ticking up a little bit more pressure on the rental side. And then there was this issue of services in general. Motor vehicle insurance fell 2% in the prior month. Not sure why, but it was down again 0.3%. And then Andrew and Joe, are not here, but there's a perennially long-running argument, maybe it runs about 3 or 4 years now, about airline fares.
Right.
They were up 2.2%. That's a way that energy bleeds into other issues out there. But overall, the issue, let me just look at this number here. There's a category called services less energy. That was up 0.2%. Reasonably contained. If we continue on this path, we can get down to the Fed's target. It's just going to take some time.
Yeah, and as we mentioned earlier, I mean, the Fed's target, of course, based on PCE, different calculations. Shelter has less of an impact.
We'll watch the PPI tomorrow. They put together the CPI. They throw out some stuff. They put in the PPI. They put them together. They come up with the PCE. That's the one the Fed's decided. And then we can have this discussion another time about the extent to which Warsh is or is not going to follow that number or come up with something different.
Speaking to your point about food, what caught my attention in the release, the index for fruits and vegetables decreased 0.1% in July as the index for lettuce fell 16.4%. Is that the parasite effect?
Yeah, for sure. Demand goes away. You got to cut prices.
She's really ahead on this lettuce story.
Good one.
Ooh.
Good one.
You know what you can't do with lettuce? Is just put it in inventory and sell it another time.
No, you can't.
You got to mark the price down and see what you can move.
As we talked about earlier, lettuce has a very, very short shelf life.
Exactly.
I just got to let us move on. How long do we have? How many months does it take, Steve, to make a trend?
I mean, we say 3, but that's like, there's no official aspect to that.
Yeah.
But no, if what you're saying is we have 2 out of 3. Wasn't that a song, 2 out of 3 ain't bad?
That's Meatloaf.
That's Meatloaf.
That's another food reference.
Another food reference. But we have 2 relatively benign. Okay, I don't want to throw, well, I guess that's what I do is throw cold water on parties here a little bit. That's part of my job. But we've had this cyclical kind of thing where inflation's gone down in the summer and come back again in the winter. There's it's this thing called residual seasonality. And I'll make English out of that, but residual seasonality is we seasonally adjusted the data and we still have seasonal adjustments. We still have seasonal issues in the data. We thought we took it out, but it didn't all come out. So for example, we think we adjust for price changes in January and we still see price changes in January. That's residual seasonality.
And it maybe had an impact on last week's jobs number, all the rest of it. Rick and Steve are sticking around. Let's bring in our panel. Michael Strain is the director of economic policy studies at...
If you're just joining in, just so you know, CPI came out, everything hit expectations. Not hot, not cold, exactly at expectations.
So Michael, I mean, not a dramatic market move, but largely as expected in a benign fashion on CPI.
Initially a pop, a drop,
yeah,
and then
to continue
we're right
with the
back to
meatloaf
where
reference,
we were at
I don't think we should
8:30.
see paradise by the dashboard light here. I think this leaves the Fed in the same place it was in before the report came out. This 0.2% monthly figure was right on the bubble. I think anything below this, the Fed could have had a lot of the pressure taken off of it. Anything above it would have been a clear signal. I agree with Steve, of course, that in order to figure out what the PCE is going to be, which is the index the Fed pays the most attention to, we need the PPI data for tomorrow. But the data we have this morning is consistent with core PCE coming in at a 3.3% annual rate. That is up considerably from this time last year. It's actually up considerably from 15, 16 months ago. And I think that leaves the Fed in a hard place.
Mm-hmm. Yeah, I mean, Kitty, there's no doubt that the Fed's in a tricky spot. Maybe it often is. But at least these numbers don't seem like there's the penalty for waiting is particularly large in terms of tightening.
I think the Fed is in a really difficult spot, and it's worth remembering that the other side of the coin that they are dealing with is a really disappointing jobs number last week. And, thinking about how to conduct monetary policy in a situation where you've got persistently above target inflation that is bouncing around, but not yet a trend in the right direction, coupled with a softening labor market. We saw job losses last week. Most of the job growth over the last year, it's been anemic, and most of it has been in healthcare, which is, it's great that healthcare is hiring, but that is not a great sign of the overall health of the labor market. And so the Fed has to really balance those things as they're thinking about how to deal with interest rates. And there's they're not in a great position to make that decision. And I'd add to that that we've seen a resumption of hostilities with Iran and a resumption of Trump's trade war tactics. And those two things are really adding to incredible uncertainty over the path of the economy. And uncertainty can be very, very costly.
Kitty, I just want to make a very small point, and then I'm obviously bring in Rick here.
What's her name?
And I've made this point a lot. The Fed is always in a box by definition. The Fed is always in a tight place. If the Fed is not in a tight place, it's not doing its job. When was the Fed not in a tight place? When inflation was high and it had to raise by 75 basis points over 4 meetings. The Fed was not in a tight place then because there was no question. When the Fed is doing its job, it's in a tight place because there's this delicate balance between the two mandates. So when somebody tells me the Fed's in a box, I just want to make a point. The Fed's job is to be in the box. Wants to be in the box.
Right, you want to be somewhere close to that
somewhere
equilibrium.
Close where it's a difficult choice to make. That's what it does. I'm sorry, Rick, go ahead.
All right, Rick, tell us the
Well,
truth.
no, I don't question that. I do look at the probability since the number was out. We've gone from like 45.5 to 44%. So hardly any movement. But the point is, if Mr. Warsh wants us all, investors meaning, to decide where the Fed's going to go by how we interpret, how we trade, what our footprint in the market is, right now, there is not a call by the markets or the investors that make up the markets to raise rates. And I'll stick with that. I think that where interest rates are now has snugged up in terms of inflation. 7/8 of the inflation picture was there. What's left is what's going on in the war. And that uncertainty, in my opinion, is the whole key to whether we get a hike or don't get a hike based on the longevity and how much more input into the inflation scenario high energy prices and issues bring. The AI story, that's completely new. I'm not sure how the Fed's going to work around those upward pricing pressures and things like chips. But ultimately, that is the area I think we need to pay more attention to.
Can I push back a little bit on the high energy prices theme? And I want to give you another hot take. Oil prices are up, and oil prices and gasoline prices matter. But you know what's not up? Natural gas. And natural gas is a key ingredient in plastics and so many things that we buy, even cosmetics and pharmaceuticals. So with natural gas prices down, I wonder, Steve, if that's mitigating, and it's an open question. We can unbox this. Mitigating some of the impact of the oil price. I don't know. Maybe I'm wrong.
looking up data to contradict you.
Okay. Why?
Because electricity.
Okay. Well, yes.
So that's something that people pay for.
Up 17% on, I think, on average.
4.2% year over year on the consumer price index.
17% jump in New Jersey year over year in electricity prices.
Right. But overall in the country, 4.2%.
But I only care about myself.
I know you do. Can I ask Michael Strain a question? Michael, I want to get this off of my chest here. This question here. Does Kevin Warsh have to hike rates to prove his credibility to markets, given where the 2-year is trading? And Rick, I know you have a lot of thoughts on this, but please hold back for 1 second.
Look, I think a lot of that depends on your view on what the Fed should be doing based on the data. And my read is pretty clear. The unemployment rate has been at 4.1 or 4.2% for the past 2 years. It is low and it is stable. Financial conditions are easing, not tightening, and core PCE inflation is accelerating and has been accelerating for more than a year. And this report does not indicate that core PCE is going to begin decelerating in July. So I think the Fed should be raising. I think the Fed has its foot on the gas pedal when it thinks it has its foot on the brake pedal. And so if you view the economy the way that I do, then I think Chairman Warsh's insistence
give us Rick.
that
come on, get this guy
getting
off.
inflation back to 2% is his number one priority suggests that he should be raising rates, and there's confusion about why that hasn't happened yet.
Kitty, you agree with Michael on that?
I actually want to go back to what you were saying earlier about the Fed always being in a box. And I think that what Michael is saying, along with the story about energy price increases, is a good example of how, in fact, this Fed is in a box of Donald Trump's making. The war in Iran and the trade war have been driving up prices and squeezing the wallets of American consumers who then, are cutting back in other areas, and that is causing ripple effects in the job market. And also, meanwhile, he has so vociferously attacked Fed independence, including restarting his attempts to fire Lisa Cook this past week, that the markets are uncertain of whether his appointee to the Fed is going to do the right thing based on the data. And I think those things really add up.
Everyone get your popcorn.
You know what? Confused markets mean that they have strange movements. They have anomalies in how they trade and how they price. Don't see it anywhere. Don't hear much in the market screen about a trade war. The question that was just asked was, can we trust Borsch to make the right decision, and does he need to hike just to prove it? That is not a question that we would be asking if it weren't for the attacks on the Fed's independence. Well, I'll let Steve answer that. Attacks on Fed independence means nothing. It's just an armchair talking point for people that like to monitor the Fed on their weekends when they put their new
trade down. It's a multi-trillion-dollar question, Rick, for people who have to run bond portfolios.
It might be in your mind, but if it really was, it would have an effect in the markets.
No, Rick, you're wrong about that.
Stocks basically make new all-time highs, and interest rates aren't at their highs.
You're $100 trillion wrong about that.
I'm 100% right. You just like to talk about the Fed because it gives you a place to hide without being right or wrong.
Rick, here's the deal. If I'm running a big bond portfolio and the Fed doesn't have my back on inflation, that matters a whole ton to me.
And what would you do if you're running a big bond portfolio and they didn't have your back and you're worried about inflation? You'd be selling bonds, pushing yields up. Sorry, not really seeing it lately.
Oh, no, 466 is what? How many basis points higher than it was just a few months ago?
It's the war. It's the war. Look at Feb 28 chart. The war.
I'll agree with you there, Rick. There's a lot in that.
I don't care if you agree with me.
The bond market is like,
give a
okay,
shit.
You're going to give me more uncertainty.
This is why you got to like him.
That's fine.
I don't give a shit if you like
sorry. Maybe that's your bond market.
Rick, there were a lot of movements in the bond market during the last press conference.
Yeah, no, it's true. A lot of movements within
I think
a range.
I think a lot of investors who look at the economy the way that I do were wondering where the rate hike was, and I think we saw that reflected in increases in the 10-year and the 30-year and decreases in the 2-year.
Sorry, you're wrong.
Michael, you recently wrote a paper arguing that the uncertainty created by the firing of the BLS chief.
They literally cut him off for ads. Like, they're going at it so hard. All right. That's why we tune in for Rick, folks. That's exactly why we tune in for Rick, because he's going to shoot it straight. He's going to shoot it straight. You know who's not, though? My hair. What's going on with my hair this morning? As you can see, I'm wearing my Lucky Buffalo shirt because I'm ready for a big one. It is obviously a CPI report day. That's why we're starting early. And on top of that, we have some earnings to get into. We have some updates as it relates to Iran and Trump. Apparently, there was some craziness with Air Force One. There's currently craziness in the WNBA with 2 ex-NBA players trying to join because they are now proud black women. There's a lot going on in this world. There's a lot going on in this world. Did you take a trade on this report? No. Most of these firms don't want you to trade the minute before all the way till the minute after. So a lot of these firms, the prop firms, don't want you to trade between 8:29 and 8:31. There's like a 2-minute full delay there, or maybe 3-minute if you want to be safe. So trading the event right away, I find, is only useful if you're trying to pass an eval, and obviously the firm doesn't have a rule against it. In terms of a funded account, I find it to be a hyper dangerous event to trade. So if you're trading it and you have some sort of edge, massive congrats to you. That's a very difficult thing to develop, especially today. I mean, let me show you some of the movement. So the report came out exactly at 8:30, which is this red bar. But look at what happened right before it. At 8:29:15, we went from 865 to 932. We jumped 70 points dropped 50 points, and then we went from 870 up to 960, pumped 90 points, and then from 960, we dropped all the way down to 750. So we dropped 210 points to then 15 seconds later, how much did we recover there? About 60 points, and then slowly grinded up, gave a little bit back, grinded up a bit more, and now we're just kind of like hanging out. So we're pretty much right at our initial print at 8:30. Once again, I'm on the 15-second chart just so we can get some finer detail to show you the craziness of this. So if you somehow had an order that was long and then you faded this and went short and then you went long at this, like, congrats to you, but that's a very difficult thing to do, an extraordinarily difficult thing to do. So more so if you hit it, it's probably a lot more to do with luck than anything else. But if you have a system that somehow is crushing it when these types of things happen, yeah, congrats to you, trade it. Don't let me be the person who gets in the way. But as to the question, did I personally trade it? No. Sometimes I will trade it. Once again, if I'm trying to pass evaluations, I won't trade it on funded accounts. And even then, it's only passing evaluations where the firm allows you to trade these events. Not all firms do. So just kind of wanted to share some extra thoughts on that. Of course, we will be circling back to that. If you are here, let me show you what's going on. The SPY is above the closing value.
All right, joining us now to talk about the impact of inflation, the state of the consumer, and the growing global running market is Berkshire Hathaway-owned Brooks Running.
Nope, boring. We're not listening to this guy. No way, no how. Anyway, the SPY is green, up about 0.4%. The Qs are up 0.9%, but what's more impressive of being green is the fact that it's actually gapping up. So there is another downside gap fill to yesterday's high at, what is this, 723.35. Once again, the high from yesterday. There is a downside gap fill on the Nasdaq. Bitcoin popped up to 64.4, giving some back, and actually small cap is holding on pretty well. So want to point that out. Of course, we do have, as I alluded to, some earnings to talk about. CoreWeave, CRWV is going to be a big discussion of the day. CRWV, CoreWeave, it's in the world of AI, kind of a hyperscaler play. But anyway, it gained 2.4% yesterday, had earnings, closing out the day at 90, and then obviously post-earnings, this is now up 19.5%, 19.5, and it is obviously trading at 108. So a huge mover there. So a little bit of an earnings update. So we have inflation to talk about, earnings to talk about, some other major macroeconomic, political tension, war stuff to talk about, breaking all of that down. Maybe we'll take a little bit of a look at what's going on with bonds and yields, so commentary on what's happening in monetary policy. And then by that point, actually, we're a little bit ahead of schedule, so we'll have some time not only to do some individual chart breakdown. When I say individual charts, I mean individual equities. So we'll do some breakdown, and then from there, if I am quick enough today, I'll be able to turn it over to you guys for any pre-market questions. So that's the plan. I do appreciate you guys joining me at the butt crack of dawn. If you haven't already, smash that like button. Don't forget to subscribe. And with that being said, Iran is defying U.S. pressure by becoming a survival economy. Tehran's leaders focus on subsistence in bid to outlast sanctions and a naval blockade. So we're at a really interesting point right now. We're talking about this in the Discord. Shout out if you want to join the Goonie Trading Discord. It is right here, goonietrading.com. But this morning of how it's kind of funny, where Trump is saying, yeah, no, they've agreed to it in private, but publicly they're not agreeing to it. So then the market's saying, well, what's actually going on here? Iran and U.S. hardened stances as Pakistan says the deal is near. So we're getting a lot of conflicting information this way, that way, every way. And who's right, who's wrong? I have a feeling the truth is somewhere in the middle, but here's the most recent breakdown.
Our top story today, oil advancing for a sixth straight day on skepticism about prospects for a deal to restore energy flows through the Strait of Hormuz. Earlier, Pakistan's defense minister said the US and Iran were close to reaching a deal regarding the critical waterway, and that's despite both sides publicly toughening their stances.
I don't trust Iran. Why? Are you saying I trust Iran? I'm the last person to trust Iran.
Last one.
They've lied to me constantly. We have total control over the Hormuz Strait right now. They don't have control. We have total control. We own it. And at some point, maybe they'll do something and then they get blown away.
That's where we're at, folks.
Middle East correspondent Abir Abu Omar joins us now from Dubai. So, Abir, President Trump saying we have total control of the Strait of Hormuz. Why are we even having this conversation?
Good morning, Paul.
Awkward
That
delay.
is the good question that everyone is asking themselves, right? So President Trump says that the U.S. naval blockade that is currently in place means that the U.S. is controlling the Strait of Hormuz. Meanwhile, the main negotiations that are taking place are in fact happening between Iran and Oman. We've obviously reported on this multiple times over the past 10 days or so. These are negotiations to reopen the Strait of Hormuz. So when you ask if the U.S. is right to assume that it has full control of the Strait of Hormuz, Iran doesn't seem to think so, and those are the negotiations again that are taking place. Al Jazeera reporting recently that those talks are in advanced stages. We don't have clarity on what exactly that means. We've reported that those talks are in the final stages multiple times over the past week or so. The foreign minister of Iran, Abbas Araghchi, had come out and said that those talks are in a good place. And then you also mentioned Pakistan's defense minister, Khawaja Asif, who told reporters in Islamabad yesterday that things are shaping up towards peace or towards something better than what we're currently seeing right now. So in a nutshell, there's a lot of unclarity still around the situation and what exactly is going to be that mechanism that opens the Strait of Hormuz, or how exactly it will take place. But one thing is for sure, we monitor the physicality of those vessels in the strait, and for now they're stuck. And not just stuck, we're actually seeing that they're prone to attacks. The latest from Central Command overnight saying that it attacked a Panama flagged ship that did not stick to the route that the U.S. had laid out. So you're not just seeing ships that are prone to Iranian attacks, now we're seeing ships prone to American attacks as well. So you have that situation in the Strait of Hormuz, and of course, a perilous situation in the other critical waterway in the Middle East, the Red Sea, Bab al-Mandab, that is prone to attacks from the Yemen-based Houthis, a militia that is backed by Iran, of course.
Seems to be a sigh of. I think that actually did a really good job at breaking down of how no one really knows what's going on, and there's a lot of double talk, a lot of, hey, it's kind of fine, but also it's kind of horrible, and we're totally going to have a ceasefire, but also this ceasefire is going to be a unique one where we're still sending missiles at ships. So maybe it randomly gets resolved, maybe it doesn't. I feel like at this point, I'm continually saying the same thing over and over and over as it relates to this. And I think one of these days it's going to be a bunch of fake news, fake news, fake news, fake news. And then one day there's going to be the actual announcement that it's donezo and the market's going to rocket. When will that happen? Your guess is as good as mine. Houthi attack kills 6 in first fatalities in Red Sea in over a year. U.S. strikes container ship. So another sign that even though we're being told it's all fine and it's going to be resolved, there are other tensions in the area. So you never know how crazy that's going to get. On an other part of the world, Besant and the Prime Minister of Japan, Takayashi, I'm sorry if I'm butchering that, just don't know how to say it properly, don't want to be disrespectful, divide on optimal BOJ path threatens yen rescue. So for those of you who were paying attention last week, you know that the JPY compared to the US dollar was trading at an all-time low. Well, actually not an all-time, a 4-decade low, a 40-year low. And then all of a sudden it gets announced that not only is the government of Japan, but also the government in the US here will be buying the yen. And then obviously it pops up. Since then, it's come back a little bit. So I think some of these articles are a bit dramatic of like, oh my God, it's getting destroyed. But apparently there are some issues going on here. And remember, this is massively important as it comes to what is our Fed doing, because remember, Japan owns a bunch of U.S. treasuries. Our treasuries have been trending down as our yields have been going up. If Japan is under enough pressure because their own currency is losing value, they might need to sell U.S. treasuries to stabilize their own currency. And if that happens, that'll push our bond prices down even more and our yields up even higher, which is the last thing the Fed wants to do, especially when there's financial pressure on them to do a rate hike, which is something that not only do they not want to do, but also President Trump doesn't want them to do it. So there's a lot of interesting monetary policy movement here, but that's why we're kind of covering this. Why the historic U.S.-Japan intervention has failed to halt the yen slide. Japan's currency is currently trading around 159 per dollar, approaching the psychologically important level of 160. You could see that by doing the USD-JPY pairing. What I just showed you was JPY-USD, so just inverse those. The reversal has come despite the unprecedented decision by Washington to join Tokyo in buying yen and pledges from both sides that further action could follow. So they're saying it could, and yeah, it definitely could. So let me switch it up just so you can see what that article was talking about right here at 160. The question is, will it keep trending down, or is this a little bit of a fluke and the market doesn't buy it? We're going to be finding out pretty freaking soon. But remember, this has a big implications on the Fed. The Fed does not want to raise rates because that would make capital more expensive. As we just heard this morning, inflation is still higher than expected. Remember, inflation should be at 2%, or I shouldn't say higher than expected. It came out at expectations. It's higher than what the longer term target is. And even though the previous Fed chair, we had Powell, who's saying, yeah, like we'll get there. Like that's our kind of end goal. Warsh is saying more of like, no. That's not an end goal. It's like a now goal. So a little bit of a difference in how the chair is being run. But right now, you can see from the at expectation inflation report, the odds of no rate change, as in Fed maintains rate, it's actually now going up. It's now up to 69%. Not that long ago, it was actually inverse. It was more likely that we would get a 25 bips rate hike. So right now, at least within the U.S. markets, it's clearly pricing in the fact that, okay, inflation is the main thing we should be measuring. Inflation is coming out at expectation. Is that good? No, it's not exactly where we want to be, but it's also not bad. So clearly not really too worried about what's happening in Japan. But all of a sudden, if we see a reversal in the USD JPY pairing, and all of a sudden, like basically on a relative basis, if the US dollar goes up or if the yen goes down, it could be a bit more problematic. So just something to be paying attention to. Obviously, the inflation that I'm referring to, we just got the CPI report. If you're coming in right now, the big update is the fact that inflation came out at expectations. Year over year, they expected 3.4. We came out at 3.4. So in the short term, like I said, we hit expectations. It's not necessarily good. It's not bad. It's not bad because we're not hotter than expected, but it's also not good because remember, we should be at 2%. Granted, you could be like, but Matt, I thought the Fed doesn't really care about CPI as much. And you're right. They care about 2% in terms of PCE. CPI and PCE are very similar. They measure a lot of the same things. The basket is slightly different. And also the time frame at which they are looking at the data is slightly different. So there are nuanced differences between PCE and CPI. But I want you to know that the Fed cares about PCE being at 2%. And right now, this is a good idea of roughly where PCE is at. So probably it'll be at expectations, but the magnitude of it is a bit higher than expected. Just so you know, we are getting crude oil inventories. Might be interesting this time around. Obviously, updates going on with Pakistan, Oman, Tehran, and now also the Houthis in the Red Sea. And also for those of you paying attention to bonds and yields, at 1 p.m. Eastern today, we're going to have the 10-year note auction. Fast forwarding tomorrow, we're getting another inflation report. Instead of being the consumer price index, tomorrow we're getting the producer price index. Comes out an hour before the market opens. We are getting the normal initial jobless claims. And then also tomorrow at 1 p.m. Eastern. Today we have the 10-year note auction. Tomorrow's the 30-year bond auction. And then to wrap up the week, an hour before the market opens, we are getting retail sales. So back to inflation, consumer prices rose 0.1% in July as expected, putting the annual rate at 3.4%. So in the short term, you can see that the market is pricing this in as a good thing because it didn't come in hot. But I want you to understand what this means. This means that things in our life are still getting more expensive at a faster velocity. It's accelerating. It's getting faster than it actually should. We should be at 2%. That's how our forever expanding credit economy is created. We should be at 2%. So based with that, our dollar is going every single month, every single year. The US dollar goes less far. If $1,000 today is worth way less than it was 6 months ago, way less than it was 6 years ago, way less than it was 60 years ago. So that's inherently what this means. Inflation is going up. So on a relative basis, your dollar is going less far. And unfortunately, we're seeing a lot of this. Switching up gears a little bit, I do want to chit chat about what's happening in individual companies. We are still in earnings season. Granted, most of the major mega cap companies have reported. I believe we're still waiting on NVIDIA. But other than that, the major ones have reported, but they're still fun ones to pay attention to. Yesterday, we heard from Supermicro and we heard from CoreWeave and also Kava. This morning, Nebius, that's just kind of important now with Leopold and that whole situation. After the market closes today, Cisco, tomorrow, JD, bullish. Applied Materials, AMAT, some of you I know have been paying attention to that. And then on Friday, it's a bit more quiet. So it's still technically earnings season, but just not as crazy as it was for the past 2 weeks. But still some high flyers. CoreWeave, ticker symbol CRWV. It's an AI play. Flips from -7% to +7%. It's currently up 19% in pre-market trading. It had a loss, an EPS adjusted loss of less than expected, so it technically beat there, and its revenue was also higher than expected. So it was a double beat, and the market actually rewarded for it. And I'm saying that not really facetiously, but recently, we've been seeing companies that had double beats and still went down. So this is one of the logical ones that had a double beat, pretty decent guidance, and obviously the stock is up. Supermicro, SMCI, another AI play. God Candle, the initial reaction. How's it doing in pre-market trading? SMCI, I forget the exact number. SMCI, currently up 9.9%, so almost 10%. So SMCI doing very, very well. CoreWeave doing very, very well. That's your very quick, I suppose, AI update. But one more, Kava, also crushing it. Kava, if you guys don't know what that is, that's kind of like a Mediterranean Chipotle. It's a food play. CAVA up decently. Once again, a double beat. The initial reaction was up 13.5%. How much is it up now? It's up 18%. So Kava crushing it, Supermicro crushing it, and then also CoreWeave all crushing it across the board, which means some of the big money players are also really crushing it. World's largest sovereign wealth fund posts record $184 billion in profit as it reveals SpaceX stake for the first time. So we're talking about Norway's sovereign wealth fund. Very interesting creation. But anyway, they're crushing it. It's 2.3 trillion. That's how big the fund is. And they just reported record half-year profit of more than 184 billion. It also disclosed it owns with 0.05% stake in SpaceX, valued at 1.2 billion. How funny is that? That 0.05 is actually equal to 1.2 billion. So one of these numbers seems very small, and then the other one kind of gives you a real monetary value of like how much it's worth. AI computing power is becoming a tradable asset class as CME launches futures contracts. I know many of you paying attention to this show, similar to me, trade NQ, MNQ, trade ES, MES, like you're trading it with these prop firms. I want you to know that there's going to be a whole new futures asset that you can trade, and this time it's going to be AI computing power. CME Group is partnering with Silicon Data to introduce 2 new compute future contracts on October 5th. Mark your calendars, about 2-ish months away. Of course, pending regulatory approval, the new asset class will give companies and investors an avenue to trade and hedge the price of AI computing capacity, much as they do oil, electricity, and other commodities. So AI compute is going to be something we can trade starting in October. And I don't have this as definitive information, but I'm assuming that the prop firms will allow people to trade it. So something to be paying attention to. If you haven't already, sign up for the newsletter. It is 100% free. It's always been free, always will be free. Comes your email inbox every single Sunday. My mod will put it in chat. It's also in the description of the video. But here's what you get. A breakdown of what's going on in the market, cheat sheet for earnings, and I give you this graphic. Obviously, a cheat sheet for all the major macroeconomic events. Today, we already got the big one of the day, the CPI report. Tomorrow, you're going to get PPI. And then I give you the seasonality of each individual trading day. And I want you to know that over the past 27 years, over the better part of the past 3 decades, and well, really in the past 7 years, this day has strongly favored the bulls. So will that play out this time? Well, over the past 30 years, it's about 54%, but the profit factor is very much in favor of being the bulls on this particular day. Is that a guarantee? No, I'm giving you the odds of the scenario and how it's played out historically. Fast forwarding tomorrow, it's still leading bullish, and then Friday is also slightly leading bullish. So sign up for that newsletter if you haven't already. There's literally no risk to you. It is 100% free. Speaking of the overall market, we are roughly near all-time highs. Right now in pre-market trading, we're trading around 7765. The all-time high is 7793. So we're off by about 30 points, which on the SPY is roughly equivalent to $3. So we're within that realm of an all-time high. We had this huge pop. We are now just flagging sideways. The question is are we going to push and really go to 7,800 and then start targeting something like maybe 8,000? Or is it going to take a breather first and get this downside gap fill at 7610. I have an active play on the market that will hit the downside gap fill at 7610, but I have to admit, after today's inflation report, it might be something I just have to admit I'm wrong on, cut the cord, and just wait for things to kind of reestablish. But as things started to break down on Tuesday the 6th, I was like, oh, okay, this is reasonable right here. We pop up, we pull back, downside gap fill, higher low, and then take off from there. I didn't anticipate it where we pop up, hold steady, refusing to break, and then all of a sudden get going again. So we're going to see. Of course, there's a non-zero chance that this pop is just used for profit taking. And it's one of those days where pre-market is super, super strong and then we sell off all day and give it all back. That's possible. Not likely, but obviously it's possible. So I'm going to wait to see what the opening session is really actually looking like. But I just wanted to let you know where I'm at. I'm definitely not bearish. I was bearish to the point of, I thought I could play this technical down fill, like this technical gap fill on SPX. There's a new one on the Qs. We're going to have 1272335, yesterday's high. There's going to be a downside gap fill to that this morning. And then there's an existing downside gap fill to 70159. I truly thought both of these would fill before we had the next leg up. Obviously, I was wrong on that. Well, I'm seemingly wrong on it, and we'll see how it actually plays out from here. But the market is definitely showing a decent amount of strength. Of course, when the market gets going today, as I always do, I'm going to show you options flow. Shout out to Spot Gamma for giving us all this information. Very, very useful. So we'll look at the flow of the S&P 500, Mag 7, and NASDAQ. As you could see yesterday, they all got hit just for it to get decently turned around in the overnight session and then leading to an even stronger morning session. So very interesting setup there. Looking at the positioning, we have negative gamma all the way up to 7,800. We also have negative gamma all the way down basically to 7,700. So today legitimately could be like anywhere within that 100-point range is very fairly within like possibility today. Huge, and we're kind of right in the middle of it too. So for those of you who's like, okay, where's the negative gamma? Is the negative gamma setting up to be bullish or bearish? It's pretty much 50-50. We have potentially a 35-point push to the upside and potentially a 65-point push to the downside. There's negative gamma above. There's negative gamma below. We can see big, big moves today, especially with the CPI coming out, especially with a lot of unknowns as it relates to the U.S. and Tehran. Lots of unknowns, and we're seeing that perfectly reflected in the options market here, where there is negative gamma above, below. Positive gamma node here at 7,700, positive gamma node here at 7,815. So, of course, I'll be coming back to this, but feel free to mark those down. And for those of you who are maybe interested, here are my key levels on the day. This is the type of stuff that we put in the Discord pretty much every single day. Obviously, I always mark out the previous high, low, close, and then I also mark out the day before's high and low. So I like to track the two most recent highs and the two most recent lows, and then the most recent closing value. That's your green, red, and your white. And then the yellow lines are just the key gamma levels. So I look at where the big money is positioned and then just mark them on my chart. So as I'm trading throughout the day, I don't have to keep double checking, and I just know where the big money is positioned. So feel free to write these down. Feel free to use them. If you like them, feel free to not use them at all if you don't find them to be helpful. But obviously, these are the levels that I am personally going to be playing off of. So right now, the SPY is showing strength. The Qs are showing strength. There is two downside gap fills on the Qs within proximity, and there's one downside gap fill within the S&P 500 in proximity. CoreWeave holding its earnings beat gain. Same thing with SMCI and same thing with Kava. Those were three of the more popular ones that reported last night after market close, and they are all doing pretty well. How is NBIS doing? Nebius reported this morning, and it's up 16%. This is another AI play. So in terms of the four most popular earnings between last night and this morning, you have CoreWeave, you have Supermicro, you have Nebius, and you have Kava. All of them crushing it. Minimum up 9%, maximum up 20%. So all looking pretty good. The golden question right now is it going to hold? And that's what we're sitting here for. And we're going to be waiting for market open to see, okay, are the bulls reloading here? Are they going to be sizing up and pushing this to 8,000 on SPX? Or is there going to be some profit taking? Your guess is as good as mine. No one on God's green earth can tell you what's going to be happening at market open, which is why I'm just going to be waiting to see how this all plays out. So that's pretty much the skinny on the situation. Let's use this opportunity to kind of break down the movement of individual stocks. So We talked about the SPY pretty much at an all-time high. There is a downside gap fill to 758.58. On the Qs, there's going to be a downside gap fill to yesterday's high, 723.35, and then there's another one at 701.59. On the Russell, there's going to be a downside gap fill to 301.99, and then another one to 296.66, but we are once again in that territory of a new all-time high. Bitcoin is doing nothing, and it's been doing nothing ever since June. It's just right at its EMA cloud. Lower highs, higher lows, the definition of consolidation. The biggest company in the world based on market cap looking really good. Nvidia trading at 220, all-time highs 236. It's holding its cloud. There's a couple downside gap fills, but overall, like, it's just showing why Nvidia is Nvidia. Meta getting a nice recovery from 525 back to 600, working on that breakout. I am looking at these upside gap fills. I think given enough time, I deeply believe it's going to eventually look like Microsoft, kind of on the struggle bus for a while, then gets its shit together and explode. So I'm betting on Meta doing something like that, but I'll admit it is taking a little bit longer than I anticipated. Rumble, the market finally realizing that this is probably one of the most undervalued AI infrastructure plays. Shout out to everyone watching on Rumble, having a scorching gain of 11% yesterday, pushing that $7 level. I'm hoping it can eventually come up here and battle it out at $8.50. SpaceX, this is a fresh IPO. I've made my thoughts on this very, very clear. I'm a big believer in the long-term potential of SpaceX, but it's very, very tough to get involved with a recent IPO this early on. We just don't have that much data. We only have one earnings. There's just not much data to trade it. And if you look at the data of other IPOs, it kind of suggests actually wait multiple months before you start to get involved. So whether you want to actively trade it or invest in it, I think it's prudent as an active investor to wait. If you want to trade it, well, you're just playing the ranges, and I wish you the best of luck. Broadcom, how's that one doing this morning? Broadcom is closed out at 416, currently trading at 424, so it's up about 2%. Kind of looking like NVIDIA, consolidated for a bit, broke out, has some, it's not that far off from its all-time high, has a couple downside gap fills, but overall showing strength. Palantir, ever since its earnings, once again, absolutely crushing. I don't know if Michael Burry is still short on this one, but if he is, he's getting his ass handed to him. AMD having a very good morning, trying to push its cloud. Let's see if it can actually get that breakout today. Micron, same thing, selling off to its cloud, trying to push it this morning. Maybe it gets rejected, or maybe it's a legit breakout. You got to wait and see. Apple, unfortunately, putting in a lower high. I was really surprised about this development on Apple. Ripped, had its earnings, gap down, got back up into the cloud, and I thought it would recover and go for this upside gap fill, but actually, no. It turns out that this was a lower high rejection, so be careful on the breakdown below 300 on Apple. Tesla trying to recover a little bit, but honestly, this one's really fallen from grace not that long ago, trading at 500, even more recently around 420, and puked all the way down to 300. So kind of getting brutalized. Maybe it can start to recover, but clearly lower highs, lower lows, a lot of bearish momentum. SanDisk looking like Micron, ripped, pulled back, went bearish, and trying to battle to go green, but we have to wait to see if it actually can. Intel, same thing. It's right at that cloud. Amazon hanging out near its all-time high, flagging a little bit, but we'll see. Had really good earnings popped up there. Big downside gap fill to pay attention to. Google surprisingly losing its footing. It kind of got hit at the end of July. Strong recovery. I actually thought it was going to bounce off of 350. Surprised to see this recent weakness. Could be a quick little flush out. If it recovers 360, I actually like that as a play. But watching this one closely, bit surprised of its weakness from yesterday. TSM looking like some of these other plays where it's just at its cloud, and the question is, will it actually break up or not, or get rejected? Hut, same thing, try to get going, got smacked. Lam Research, it's right at that potential breakout level. Marvel, right at that potential breakout level. ASML, kind of looking more like Avago, AMD, and NVIDIA, where like, oh, wow, it's actually like kind of going. Can it actually hold it? Salesforce, not doing much yesterday, a little red this morning, but overall a really decent push for the past couple of weeks. Netflix continually getting destroyed, trying to break out. It's a little red yesterday, looks like a rejection, but maybe this can actually get going. But Netflix is been nothing but a struggle bus ever since its earnings back in April of this year. Oracle, similar situation. Is it actually going to break or not? But really falling from grace, 250 down to 115, getting torched. Texas Roadhouse in that zone of a new all-time high, technically clocked it yesterday. You guys know I love this as an investment. CoreWeave, we already spoke about that. Coinbase doing nothing, looks bearish. MicroStrategy doing nothing, looks bearish. DJT also had earnings. Obviously, the market has not yet rewarded it for selling Truth API for $100,000 a month. But hey, here we are. Maybe things will change. AMC, probably a double top rejection. If it goes below the 50 EMA, that's not good. If it breaks 160, this thing is done for. Remember, it's just a matter of time before they announce another dilution because they simply have too much debt. Bonds are going down. Yields are going up, putting pressure on the Fed. Silver, getting that breakout. Gold, holding the breakout. So for those of you trading precious metals, congrats if you've been bullish. Oil recovering, not the best or not the best sign if we're using it as a barometer for the tensions in Iran with us and obviously the US. So paying attention there. Looking at some of these penny stock pump and dumps, CAS obviously destroyed. TGHL going up for the third time, getting destroyed. SDOT, we were talking about that, short at 23. It's currently trading at 12. Another one. Like, these are all just the most evident pump and dumps, and yet people still keep falling for it time and time again. ADVB, same thing, getting destroyed. JEM, still surprised that Cayman Holdings didn't go well. EHGO, pump dump. WBuy, pump dump. Second pump dump. AMIX, I mean, as of Tuesday the 4th, people were in here trying to pump it, saying, no, it's going to keep going. Guess what happened? Next day, inside day, then we started to break down, and ever since then, 11 down to 9 with a height of 24. Like, if you guys are not seeing the pattern time and time again with these pump and dumps, you need to get your vision checked, because like it's as evident as it could possibly be. It's as evident as it could. It's like in our face every single time it happens. And then people are chasing these penny stocks, and then it gets dumped on them, and then they're surprised again. They're like, oh my God, I thought this one's going to be different. It's like, no, this is just how pump and dumps go. We all got to get on the same page there. This is how pump and dumps go. Yup, AMC dilution game plan until Fed's lower cost to borrow. They would then refinance, and who knows how they will screw the shareholders again. I don't know if they're intentionally screwing shareholders. It's just because of the debt situation that they got themselves into that they have to keep doing this to service their debt covenants. They owe a lot of people a lot of money, and they need money, and they're just not generating it. People just do not go to the movies the same way they do. And I get it. Everyone's like, oh my God, but we just broke a box office record. Not when you adjust it for inflation. If you're using the box office as a measure of popularity of going to movies, the proper way to do it is to adjust it for inflation. Think about that. If ticket prices back when I was a child, it was like $8. When it's now $25, well, okay, that doesn't mean if you're matching numbers, you're actually still way below, because just the cost of going has gone up so much. So yes, using the box office for like, is this popular? Okay, it's fine. But if you want to do the proper analysis, the only way to do it is by doing it at like in inflation adjusted, because that's the only way to compare this apples to apples. And I actually think that's how they should do it for any of the box office records. When you're like, oh, this is the highest grossing movie of all time. If you made $1 billion on a movie 2 decades ago, that was way, way, way different than making $1 billion now, because once again, $1 billion just gets you less far. It gets you less far. How does one break a psychological bias to the bullish market direction and seem to be blind to bear moves and can't shake it to the bull bias? Well, that's not psychology. That's just facts of the market. That's not a psychological bias. That's a statistical bias that maybe has developed into a psychological bias. But yeah, the market always goes up. That's the overall market goes up. That's what, I don't know. I guess I don't get the question. That is not just, it sounds like you have a psychological bias, but the psychological bias is based in fact. The market, given enough time, goes up. There is no 15-year period. You cannot pick a single day in U.S. stock market history where you pick that day, fast forward 15 years, and the market is lower. There is no single 15-year time frame that the stock market is actually net down. It does not exist. Yes, I do. I just miss the bear market moves. What do you mean you miss it? If you see the market dipping, that's just when you buy because you have this bias towards the upside. But you have to be careful about what you're buying. When you see a dip on a shitty stock like AMC, that's not a dip you want to buy. When you see a stock dip 10, 20%, such as Meta, Microsoft, Apple, these like core blue chip stocks, you just buy them. That's what you do. We don't need to overcomplicate it. So you're not really missing anything. Those are the bear markets. That's when you should be loading up on whatever you perceive to be your favorite investments. You don't want to be doing it when they're at their own highs. You wait for them to get hit. I swear, if people just had the basic strategy of list your 10 favorite stocks and just buy them when they drop 10%. And if they drop another 10%, buy more. And that's all you do. And then you just wait and wait and wait and wait. You're going to be doing pretty well. And then it's even easier if you're picking the high quality blue chip stocks. Like if that was your basic strategy is like, these are my 10 favorite stocks. I buy them whenever they drop 10%. And if they drop 10% more, I buy even more. And other than that, you're just waiting. You would crush it. You would absolutely crush it. And people don't like it because that's like too simple, and you can't sell like a multi-$1,000 Furu Guru course saying that because it only takes 30 seconds to explain. But long-term investing, you really don't have to overcomplicate. Long-term investing, in my humble opinion, is actually incredibly simple. You buy high quality blue chip stocks, you buy more when they're on discount, and you sit and you forget about it. That's all you have to do. And if you don't want to pick individual stocks, great. Go 50-50 S&P 500 and NASDAQ. Or maybe you want to do, I don't know, 40-40 and then 20 in the small cap sector. If you're like, hey, man, I don't even want to pick individual stocks, that's fine. Just pick the overall market. Pick SPY, pick QQQ, pick IWM. You could do 40-40-20. You could do 45-45-10 and move on with your life. Like that, you would crush it. You would, if you did that, if you just did 45-45-10, 45% of your money into SPY, 45% of your money into Qs, and 10% of your money in the Russell, you would beat like most hedge funds in existence. You would beat most people who do this professionally for a job, and that like they're all they're supposed to do is be generating alpha. You would beat most of those guys. Like maybe actually probably a super majority. I'm not saying most as in 50. You'd probably beat like 80 to 90% of them in the long term. But once again, I think this is a good time for me to emphasize there is a gigantic difference between investing and trading. People confuse them because they both happen in the stock market. They both require you to hit buy and sell. Investing, in my opinion, is comically easy, and all you have to do is be disciplined over a 2, 3, 4 decade year time frame. You buy high quality things, you move on with your life. You could do better if you get into like cash secured puts, covered calls, things like that, portfolio secured puts. Yeah, there are ways where you could optimize that, but maybe you don't care about doing that. So whatever, you could make it a little bit more complicated. And for that extra complication in long-term investing, you're going to get more percentage points returns for sure. That's possible. But still, that's all in the realm of being comically easy. And I think a lot of people end up confusing that with trading, which is extraordinarily difficult, So whatever you're doing in the market, make sure you know which one you're engaging in. And for me, mentally, yes, I have long-term investment accounts. Those are my biggest accounts. And then I have active trading accounts, which are smaller. I literally have them on different brokerages, different accounts, because I like when I'm on that brokerage, when I'm on that account, I want to have my mind thinking properly of what I should be doing in that account. So I do kind of split them up, and I have completely different accounts, and I use certain accounts for certain things and then other accounts for other things. And I really try to not mix and match it. So that's how I end up doing it. Like I said, I don't even think that we could talk for half an hour about long-term investing. I think it's a 2-minute conversation. High quality stocks, buy them on discount. And if you're familiar with covered calls, get involved in that. If you are familiar with portfolio secured puts, get into that. And that's it. That's the long-term investing strategy. Active trading, instead of being a 3-minute conversation, is probably like a 3-year conversation. And unfortunately, out of those 3 years, the most complicated part of it is discipline and psychology and doing what you know you should be doing, because it very quickly tilts into this world of, okay, when I follow it, I make money, but once in a while I get a little bit crazy, and then you end up like doing shit you shouldn't be doing. So still the overlap between the two, not only do they both happen in the market, but also the overlap is, do you have discipline? I think for most people, it's a lot easier to be disciplined with long-term investing than it is with active trading, because with active trading, you're making decisions within the split second. So you need to have your discipline every single split second. While with long-term investing, it's more slower moving. So it gives you time to like actually think, is what you're doing smart? Is it dumb? Are you following your rules? Are you not following your rules? Like that type of thing. Guys, did Matt finally get his Apex payout? Nope. I am still patiently waiting on that one. Unfortunately, that's a thing that would really help my long-term investing for sure, to be able to throw an extra $1 million into that. I would love to be doing it, but nope. Your boy is being as patient as possible. Okay, there are currently a downside gap fill on SPY, and there's a more evident one on the Qs, just so everyone knows. We could watch CoreWeave. We could watch Nibius. They both had really good earnings. Both are up about 20%. CoreWeave is up 20. Nibius is up 17. These are both AI plays. Supermicro also up decently. And then Kava, which is the only non-AI play that we're talking about, also up. So right now, the overall market is up. We had a CPI report coming in at expectation. So not hot, not cold, right at expectation. So that's good in the short term, but the magnitude in the long term is not good. We're up, about 75% higher than we should be. We're roughly around 3.5. We should be at 2%. So in the long run, something needs to fix, but in the short run, or in the short term, obviously from 8:30 to 9:30 in the past hour, the market clearly likes it. We have some earnings. Earnings season is still on. It is slowing down. There's a couple more important ones that I think a lot of you care about. But with CoreWeave and Nibius, if you caught this, if you caught Supermicro, if you caught Kava, congrats to you. So that's your skinny on the situation. We have about 30 seconds to go until the market goes and lets us in, lets all the DGens in. So get your questions in chat. I'm going to be doing it. Speaking of discipline, I'm going to be doing everything in my power to not be trading the market open, because that's really where I personally get destroyed. So I'm going to be doing my best to kind of let the institutional traders trade, see what the levels are, find support, find resistance, wait to see if there's profit taking, wait to see if there's bullish follow through. So this is a perfect time for your questions. What are your questions? Let them fire. I have Rumble chat. I have YouTube chat. We are going to be spending the opening 10 minutes, 15 minutes, not only watching the opening, but also chit-chatting about whatever is on your mind. All right.
Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun.
All right. What do you think about 4 U's, energy fuels? I believe this is a uranium play, right? To my understanding, uranium as a commodity is going to just, that and copper are apparently, I've read some things that the expected demand for uranium for copper is going to skyrocket. I have no live play on it. It makes sense to me that they're going to go up, but I'm nowhere close to an expert on this field. Nowhere close to an expert on that field. Did they bring our boy Rick back? Opening bell, some green, some red. I kind of like that graphic. That's interesting. Oh, wait. Oh, shit. That was, I wanted to show you that tweet. That tweet was absolutely hilarious. All right. We already got the downside gap fill on SPY. We opened slightly above the high value from yesterday. We opened at, what was this? 774.71. The downside gap fill was 10 cents below. So we hit that downside gap fill on SPY. Was there one technically on SPX? There was not one on SPX. So there was a close downside gap fill on SPY. It did not exist on XPX, just so everyone knows. And then in terms of other downside gap fills, the Qs have one all the way down to 72335. And it looks like there's quite a bit of profit taking out of the gate. This is exactly why when you see downside gap fill, you have to be careful, especially chasing out of the gate, because things like this can happen, especially if they decide to do some profit taking. Let me switch this up so you can see what's above my head. Shout out to Bookmap. There are some buyers at apparently 29,890. Probably something to pay attention to, but things get a little bit squirrely at market open. So we're going to patiently wait to see if the Qs get their downside gap fill, if CoreWeave can hold, if Nibius can hold, if SMCI can hold. All of them are holding decently thus far. Kava up 12%. So we're going to see how these play out today. I'm not the most interested in trading this right out of the gate. Like I said, I kind of want to see how this stuff decides to develop or not develop. Let me show you guys this. Why is this? Looking a little bit about order flow. Wow, there was a lot of sellers there at right before market open. Right at 929, they destroyed it at 980. And they knocked it down a good 70 points since then. They ran into there's a lot of buyers here, completely absorbed. Think about what this means. For those of you who don't know, when it comes to day trading, one of my favorite tools is looking at not just the pricing, the high, the low, the close, like the geometry of the chart, but also what's nice about order flow information is it tells you what actually happened in that bar. So we have, like any of these bars, you might have a similar bar later, but for right here, we can see someone just try to buy a lot. So before, like whatever, a candle's a candle, open, high, low, close. But what's interesting is you can see right here, someone aggressively bought like 250. That is a big, big purchase. But what's interesting here is this can now play out one of two ways. Let me give you kind of like a real-time breakdown of order flow, at least how I use order flow. So option number one is we get a V-shaped reversal, and all of a sudden you see these buyers. That makes sense. This print ends up somewhere middle of the bar. You could take that long, risk the low, and be like, okay, these buyers know something I don't know. What's interesting is all of a sudden, if you see all of those buyers and then in the next bar or two, you actually start to go lower. Well, that tells you someone is trapped. Someone bought there, but now they're underwater because it's pushing against them. So as it's happening in real time, the question is, are you getting a buying reversal, aggressive buying that switches it, which appears to be playing out right now? Or did all those aggressive buyers just get absorbed? There's a larger seller in the market, and then all of a sudden you start to crack, and now all of these people who just bought get screwed anyway, and it gets dumped. This is the kind of setup I would personally be looking for if I was looking to actively play this downside gap fill. I would want to know is beyond the statistics and the geometry, the technical setup of this downside gap fill, I want to know if there's some buyers trapped. I can see buyers got trapped right here at 928 this morning, 2 minutes before the market opened. Someone tried to aggressively buy at 980. There was more aggressive buying right at market open. Once again, that's what the green is. It's aggressive buying. It's when the buyer traverses the spread and they buy on the ask. That is aggressive buying, and then obviously aggressive selling is the opposite. So I see trap buyers here at 985-ish. I see trap buyers here at 30,000, key technical, psychological, and gamma level, and then boom, getting trapped in real time. They're trying to defend this level at 900. We are watching this push and pull, this really the battle of the bulls and the bears, where lots of bulls are stepping up right here, which is interesting. You want to see those bulls step up if you're bullish, but then you need the follow through. If you see bulls stepping up and they just can't get the job done, well, that tells you something. It tells you you're getting screwed. So, or it tells you the bull camp just doesn't have enough. It tells you that there's like quote unquote secret amounts of bearishness, that they're absorbing all these buys. And if you start to crack anyway, that's not a good situation. So it's one thing to see aggressive buying and selling, but then in my mind, it makes the most sense to see what plays out right after that aggressive buying and selling. There's a lot of aggressive buying. Did the market agree? Did we follow through? Or did all this aggressive buying just get absorbed and we start to break down and then those players get trapped, which in this is a very unique example of it. But it is interesting to think that these buyers are not only trapped up here at 985 and 30,000, they're now trapped here at just above 900. And if this starts to crack, if we take out this 935 low, yeah, I was right. Well, then we're clearly looking at this downside gap fill, because if these players are trapped and then they decide to sell because we're starting to get cracked, well, then that's the fuel down to the downside gap fill. So I know sometimes we don't really get into the nitty gritty. Sometimes we're more so just looking at the geometry, and that's on me. A lot of the times we're just looking at the geometry and the statistics of it. When I say geometry, I just mean like literally the setup of the charts. But what's crazy about this is why? Why do we do it like that? Not every candlestick is built the same. They might all look the same, but we want that more in-depth information of where were the large orders actually executed? Who is potentially right? Who's potentially wrong? Who's potentially trapped? Right here, I see a big order of buying, big order of buying, big order of buying. So they bought at 985. They bought at 900, they bought at 900, and they bought again at 936. These are huge orders hitting the tape. And the question is, will they have follow through? They're trying to right now. There's more green, but another group of 250. We're hitting limit orders. There's market orders. Someone is trying to keep this up. And all of a sudden, if you want to ride with them, okay, understand where they're positioned at. Ideally, you have a better position, but you got to be on top of your risk management. But what's more interesting, coming back to the structure and the geometry of it, so not only are we looking at the order flow, but we understand where these guys might be under pressure. If this dips below 900, not only is that breaking the psychological $100 level, but on top of breaking the $100 level, we have 4, 5, 6, 7 massive orders, and all these players are underwater. They're all underwater because the price is below it, and we can see exactly where they executed it. And if they decide that, nope, it's just not their reason to be in, well, boom, then you get to sell off all the way to the downside gap fill. So adding, I know we talk a lot about the stats of things like gap fills, which that's in the Discord. Sean, if you could post that in a DM to me, give me the odds of the downside daily gap fill on the Qs, and I'll share that with the audience. So not only do we talk about the basic stock, the stats, which is something to know, but then on top of it, you want to know when to execute it. I feel like I'm one of the major people who tell you guys, okay, we know the odds, but that doesn't mean it necessarily happens right out of the gate. So from there, you might be like, okay, I like the generic odds of these downside gap fills, but then the question is, when do I execute the trade? You might be trying to execute a high odds trade, which is fair, and that's what we should all be doing, a high EV trade especially. But then from there, you want to be asking the question, when is the time to do it? So not only do you want to consider minimal risk, but then you want to know, okay, like I want to do it when I know bulls are trapped. And right now in real time, I see some of these positions got trapped at 985. And right now, 1, 2, 3, 4, there's 5 large trades between 905 and 950. This was aggressive bullishness, and I'm not seeing much follow through. If this starts to crack 900 as it's happening in real time, I think there's a legitimate shot that these guys who aggressively went long are basically going to get screwed, and we're going to see that fall all the way to the downside gap fill. So hope that makes sense. I think with day trading, not only do you want those basic stats, but you also want to be aware of the candlestick geometry. And I think one of the 2 final things to really pull it together is options flow, which right now the SPY is slightly trending down. The Mag 7 slightly trending down. Oops. And the NASDAQ is actually trending up. So I think beyond risk reward, which I think we all understand, and the candle setup of people looking at highs and lows, I think the 2 common things that people are missing where they're like, I kind of get it, I've studied a lot, but there's like a missing piece that it's just like, sometimes I have really good trades and then I look at a similar setup, I take it and I lose money. Well, first of all, you have to accept that there's variance, but I think the common missing thing is options flow and order flow. I think those are the 2 things that people are really missing out on, especially for active day trading. And right here, yeah, these buyers, 905, they got trapped. And if now that we're cracking, we'll see how it plays out. But I have a feeling it's not going to end the best for them. And then we'll just revisit it at the downside gap fill, which I think I haven't. Yeah, we're about to go. So let me add an alert. We'll see. It is 72335. The SPY already got its downside gap fill. SPX is trading where 750. That's an important-ish level. If we don't hold 750, I'd be looking at the green to red test on SPY, which is around 730, 728. So 728 was yesterday's close, but there's a big node at 730. You could see that right here, right where my cursor is on the left side of your screen, negative gamma all the way down to 730. So basically people threw on bets that will be protected at yesterday's closing value. They didn't randomly pick 730. They saw where we closed 728. They realized the closest strike to that is 730. So that's why they played 730 and 725. And actually, I think a little bit of 720 as well. So yeah, you have a 10-point region of positive gamma. So a little bit of protection if we were to sell off into this. But once again, I think that happens if we crack 750, and potentially more important, if we crack this, the high from yesterday on the NASDAQ. The NASDAQ, strong gap up. I'm still looking at this to puke all the way down to the downside gap fill. I believe I properly set the alert there. Yeah, okay. So we'll know if it gets the downside gap fill, even if I'm not on the proper screen. We'll see aggressive buying, but we don't know if it's to open. Could be market to close. Could be, but still, aggressive buying is aggressive buying. Whether to open or close, aggressive buying is aggressive buying. I'm not going to be the person to say that they're exactly the same, because they're not the same. I want to know if they're aggressive buying to open the position or aggressive buying to close. Like, I think there is sentiment there, but in terms of the price action impact in the immediate, literally as it's hitting the tape, aggressive buying is aggressive buying. What it does, the influence on the bar, on the price movement, it does not matter. Like, aggressive buying, whether to open or close, is still aggressive buying. Maybe a little bit later on in terms of this conversation of, are people trapped or not? Yeah, you want to know, are they buying to open or buying to close? That's fair. But if that's when you want to come in here, let me show you this better. You can in real time kind of discern it. So these different markers they were sitting orders. So like, it kind of like someone had a buy order all the way up here. So what they probably were short, buy order to get out, and it was a resting order. So this was probably their stop. But then right here, this was a market order. So the different symbols tell you, was it a resting order? And granted, it could have been short, and then they're like, okay, I'm taking my profits. But then this could have been the resting order to buy, because it happened as we were like getting into it. So yeah, but also I would say in terms of influence on price, buying aggression is buying aggression, selling aggression is selling aggression. It has the same measurable impact on price. What's different is what it means later in this conversation of, are people trapped or not? So I think that's a valid point, but I want to take it to the next level and say, okay, like, what does it actually mean? And then to get a better idea of it, same thing. We can kind of start to put things together by using the options market of what's the flow. Okay, on the NASDAQ, people are buying calls. They're flat on puts. Looking at the Mag 7, people are buying puts, selling calls. Looking at the S&P 500, a little bit of call buying, went flat, and no one's touching puts. So we're never going to be getting the full picture of the market, because it's one of these things that you can't like perfectly predict it. But we can put a lot of these puzzle pieces together to put hopefully just high EV at our back. Like, you're never going to have a 100% clear, 100% lucid picture of the market, because the next bar is going to be decided by the next group of traders. So unless you know what the next group of traders are about to do, you're never going to be with 100% accuracy going to be able to predict it. There's too many unknown variables. Maybe there's a Trump update. Maybe NVIDIA comes out and says something, or maybe Meta says that Mark is a giant lizard man. Like, you just never know. You never know. So because of it, we're dealing with unknowns. We're using the information to the best of our ability to make informed, educated guesses, because they are guesses, but we're trying to use some secondary and tertiary information on top of ideally good risk management to make the most informed decisions possible. I wish brokers had levels like level 4 data, knowing buy to open or buy to close. Honestly, that might be some sort of regulatory issue. Well, that's tough though. You wouldn't know that. Well, because remember, the data comes from the exchange, and you could buy on one exchange and sell on a different exchange, so you wouldn't know. Like, you could buy Tesla trading on the NASDAQ and sell it into a dark pool. And then if you buy it again, you're opening a position, but depending on how you do, the issue is actually we have too many exchanges for that to be possible. And even on a brokerage level, if you're like, brokers don't sell this data, although I think you misspoke. You said, I wish brokers had level 4, level 1, 2, all that stuff. That comes from exchanges. It's exchange level data. It's not brokerage level data. But let's say in this scenario that a brokerage was willing to sell its client's data, which it never would, because no one would ever use that brokerage. But let's say that it did. Once again, you could buy 10 shares on one brokerage, 90 on a different one, and it might think that you're selling, but you're still net positive and you maybe aren't closed out. So it would be, first of all, no brokerage would ever sell it, because the clients would be pissed off and say, we're never using you again, ever. Hang on. I want to see something quick. But even if in a fantasy world, if people did somehow have that, hang on. This is the data high and low. So we're back within the data range. I just put a block right. That was the data print high, the data print low. What did we do here? We did break that high. We swept the overnight high. We made an overnight high at 929. Let's go to the minute chart on this. Do I have this print? Okay, and I have the overnight low as well, all the way down here at 624. Let's go to the 1 minute. Let's see. All right, the first thing that is being drawn to my attention is not just this. All right, remember this big block, data print high, data print low. I'm going to stop that right at market open. We can come back and look at it. But we ran into resistance here between 930 and 950-ish. Let's see if this actually holds or not. Let's see. We're doing our first real test of resistance. How's it look on SPX? SPX grinding down even more. Just a succession of lower highs and lower lows. A succession of lower highs and lower lows. Okay, so watching that structure, watching this, very curious if it's going to get rejected in real time. Oh, okay, and VWAP is coming in at 837, which is probably honestly in the realm of this downside gap fill, so could be an interesting target if this pump here were to fail. Not only are we pumping into the cloud, we're pumping into the 1 minute 50 EMA, bouncing off the 100 EMA, but right here, we're right at this previous zone of resistance. Maybe it breaks, maybe it doesn't. I agree. Too many exchanges. I say we just let ICE and NASDAQ buy everyone out and merge together. Less competition is generally not good for traders. Generally not good for traders. They would probably sell their souls to high frequency traders and we would be screwed. Screwed. Do you think you guys get bad fills now and the regulation with respect to market makers aren't on our side and timing issues? The more competition, like kind of in a little bit of a way, protects us from that. If there's only one or two, it would be a field day. On Tradeovate web trader interface, if you add time and sales module, it shows trade size and the player's actual position size after. No, it doesn't. It doesn't have the information. The second part, it shows you the trades, but there's a lot of things that show it. But the player's actual position size after, it doesn't. It maybe shows you pending orders, but it has no knowledge of the player's actual position. Whoever taught you that or your interpretation of that is wrong. There is no way to know a player's full position size or accurately. We can like somewhat surmise it. We can like try to put some of it together. But no, whoever taught you that or how you're consuming it to say that you have the player's actual position size after, no. There are two columns that say size and actual. Okay, you're making jumps of what that means. I don't use the Tradeovate web trader. I'm sure if I brought it up, we could look at it, but it has to explain it somewhere. But I promise you, it is not the player's actual. They don't know it. Not only would they not, if they did know it, they wouldn't give it to you because no one would ever use that platform. But they also don't know it. There's no way for them to know it. So you're just making a jump off the word of like the label of what you think it means. But I promise you, it's not that. All right, will this breakout hold or not? What do we have? Morning, safe trip. I am happy to learn if it's not true. It's just what is visible. Yeah, I'm telling you, you're going off just like the word that it's showing, and you're making an assumption of what they mean by that word. And I'm telling you the assumption is wrong. I mean, I don't know, go ask AI or something, or I could look it up later. I'm not going to look it up now, but I'm definitive in this statement that there is no broker showing you the true net size of people who just traded. Like, I promise you, no one would use the broker. They're not going to sell that. And we've already talked about the logical inconsistency in the statement of like how they just can't have that. Like, you wouldn't know, because if you're trading elsewhere, you could change your net size, and then thus the base one that was showing you the information wouldn't know what's up. All right, fake out, breakout. By definition, this is bearish. It tried to get going. It tried to break out, quickly got smacked down. It took about 2-3 minutes back under the 50 EMA. Maybe it tries to save itself at the 100 here. Maybe. But I think that this one's coming down because, once again, we still have this downside gap fill to be contesting with. They tried to get it going here at 948. Just not enough gas. Not enough gas in the tank, team. You guys might not know this, but Piper is sitting right by me, and she's looking super cute. Piper just turned 3 years old. None of you wish her a happy birthday. So that's like also kind of like super fucked up that you guys didn't wish the chief investment officer of this entire operation a happy birthday. But she's a big 3 years old now. I think she's officially a cat. Like, it goes from kitten to junior. And I think at 3 years old, like, she's like a legit cat. Oh, she's so precious. Dude, I would actually burn an entire nation down if it made her a little bit happier. And I'm not even talking like a little island nation. I'm talking like a big, big country. I would take the entire thing out if it just made her a little bit more happy. The things I would do to improve this cat's life, I put her life in much higher regard than almost all humans on this planet. I think the Nasdaq is about to puke. I wouldn't be surprised if you're right. If it cracks this little trend line right here. Wouldn't be surprised. Wouldn't be surprised. Would not be surprised. Came up. What it's doing, let me see if I could show you on this. It's trying to save itself. As you can see, I have not traded today. I was good, stayed disciplined thus far. What I'm looking at is the 2 VWAP readings right here. So rejected at RTH VWAP, breakout of RTH VWAP. We come back, we retest. Is this breakout real or is it a fake out? There's a downside gap fill. Does kind of get interesting. What time is it? 9:54.
Order filled.
All right.
Order filled.
So I know it shows I'm trading 10, but it's because I'm cross trading it to MNQ. So I'm using my SIM account right here. I'm using my SIM account to trade 10. And then what I'm doing is cross trading it to MNQ. So really I'm trading one NQ, but I'm deciding to split it in half. So like, I know these numbers all look crazier, but if you want to know what's going on, just move the decimal. So I'm not risking 5K, I'm risking 550. As you can see, one of them locked in 560, but I made a 1/10 of that. So the SIM account, my lead account for the trade copier, it's just easier to do it this way. So the numbers seem crazy. I just want everyone to understand they're not as crazy because as I'm showing you right here, I'm cross trading it to MNQ. So if you're trading 10 MNQ, that's equivalent to 1 NQ. I'm trading 10 micros, which is 1 mini. And the reason I'm doing that is 1 mini is a really good size, in my opinion, for how I trade. But I want to be able to do this concept of scaling in and scaling out. And right there, I went short at 95. Apparently did not lock in exactly where I wanted. Hang on. 40. This should be 40. All right, we're going to save that as separate. So it did lock in half the position. And now I have another half of a position to see if I can catch this puke. We're going to put that at 51. So once again, if you want to know what I'm doing in my other accounts, just move the decimal over. I'm not going for 4,475. I wish I were because I think this is going to hit. Just move the decimal over. I'm going for 447. That just to explain everything. And that's why it's off by a magnitude here, a magnitude. And we'll go from there, making decent money. I just want to work a little bit more on reasonable trading, scaling. And the reason why I'm trying to trade the equivalent of 1 NQ instead of 2 is because the risk levels on these recent ranges is like, if you're wrong on one trade, trading 2 NQ, you're done. You have no ability to make a misstep. And of course that happens. I'm starting to be disciplined trading proper size. Of course that happens. The trade goes right in my favor and I would have been perfectly fine on all of these, but whatever. Discipline is discipline. Doing the right thing is doing the right thing. So just I locked in a little bit, should have been a bit more actually, but hey, we're making some money. We're making some money. Making some money. Matt would burn down Luxembourg for Piper. Yeah, Luxembourg is like 2 buildings, isn't it? That's it. I'll leave this all the way up there. So risking 750. I like it. I like it. I like it. Gives me a bit more room to see if I'm right or wrong. All right. So we are, unfortunately for me, bouncing right in an area of support. So thus far today, we sold off. For those of you who have OCD, let me make these equal so you don't freak out. We sold off, we found support, we popped up, we found resistance, we found that support again. We had a fake out breakout of the resistance, got rejected, and guess what? Came right back down into the region of support. So we have one fake out breakout of resistance, and now we have a triple, quadruple test of support. One at 935, one at 940, one at 946, and right now again at 957. So 4 tests of support. I guess 1.5 tests of resistance. We had resistance, a fake out breakout. It did go below, got hit. So some of those people a little bit trapped, but we are just bouncing back up here to see how it goes. To see how it will go. All right. What do I want to do? If this breaks, do I want to add to it? It could just be rejected right here at VWAP. I don't hate that trade. I don't hate it in the slightest, actually. Let me see. What is this? I'm trying to see a pop up to 920 there.
Order filled.
Okay, I just added to the position right here, seeing if it can get rejected at did it already?
Order filled.
Yeah, just locked in 1 on the new position. Same thing. I added 10 MNQ, so I still have this initial one down here at 51, and I added in another one. Hang on. I added in one right there, locked in a little bit just to get a bit more green. What am I at? The way it did it. Okay, that's a little mess up because you'll see. But it does first in, first out. So assume the one that I locked in was from this one, but kind of weird accounting. 70. What is this low? That's 71. So we'll do 72.50. And then we're going to set one of these to break even. Okay. So once again, these numbers are huge, but remember, it's because I'm doing the cross trading. So basically, I'm adding in groupings of 5 MNQ, which is equivalent to half of an NQ. So it just allows me to like kind of scale in and scale out, which honestly, there's so many studies and then my own trading, my own journal that all suggest that's a better way to engage with the market rather than going all in or all out at once. It is truly a better way to engage in the market. I just, before this, like I like the degeneracy of trading multiple NQs, but what doesn't like my degeneracy of trading multiple NQs is my credit card bill for blowing out so many funded accounts. So just, I don't know, as we're halfway through August here, just trying to find the proper discipline within myself to do what I should be doing. And we'll see how it goes. But I actually really like this trade. I'm a big fan of the trade I just took because right here, kind of undershot this resistance, came right up into the 100 and the 50 EMA. I took the trade right around 920, trying to scale out at 910, just in case we bounce off of 900. So I locked some of the profits in, and I'm just looking for a retest of roughly this region, which is, what's that, 78. So I want to move this one up a little bit. 78. And I'm protecting myself on some of these if there's a pop. And then if it's a runner, it's a runner. If it's a runner, it's a runner. Matt has come to the world of micros. Welcome. What's funny is I've actually streamed it before and I've done actually really, really well. Like not only my knowledge that it is better, like I've read the research papers, I've done it, but then my own interaction with it is also better. And then yet I still do the degenerate shit and just like it goes well. I get bored and then I go back to NQs. And it's one thing if I trade a NQ. The issue is when I start trading multiple and I only have 2K of drawdown when you get ranges of 100 points. Like it's crazy.
Filled.
All right. So now that that's locked in. So we're looking good. I mean, it's crushing it. We're looking good. I find that when you trade MNQ, you can be a bit more reasonable. When you're trading NQ, a special multiple NQ, especially on a 50K account, you just can't be wrong, like ever, especially with these types of moves. We move from 970 down to 860. That's 110 points. That's over 2K. If you got this wrong, or even if you took this short, you got blown out even though you're now up money. So like it doesn't give you any leeway to be wrong whatsoever. And whatever, it's high risk, high reward. If you're right on NQ, you're going to get more money because you're trading a bigger product. But once again, if you're wrong, you're really wrong. So I'm kind of currently being beaten down into the point where I have to trade MNQ because, like I said, my credit card bill is disgusting. And actually, on that note, if you like what I do, my teachings, and you want to use my code to help me out, use that code Goonie, TPT, Tradeify, basically all of them. TPT, Tradeify, Lucid, Legends, even on Apex, it's still live. So wherever you guys are, if you guys want to, if you like it, if you like this free show, if you want to support me, if you want to support the team, if you're buying these accounts anyway, check out that code Goonie. Like I said, you'll get the best deal at all the reputable firms, and it's a direct way to support the channel, the employees, me, my credit card bill, Piper, and everything in between. Yeah, and now I'm just going to see if this can hit. Total 800. I don't want to put it here. I want to see if I could get these Tradeifys to 1.2, but I'm just going to have to, take the profit there and wait for another trade. There's just too high of a chance of a bounce. I mean, I could size it down. Instead of 5, I could make it like 3 and then have 2 as a rider. Now, I'm going to take the full profit here if it hits, and then if I'm just not at 1,200, I'm not at 1,200. We're still going for this downside gap fill on QQQ. Someone asked for the downside gap fill on NDX. We're coming up to it very shortly. 29,705. But once again, right there.
Order filled.
Why did it reverse position? What the fuck? Positions. Flatten
Order
everything.
filled.
What just happened there? Why does it do this shit, man? What did I have set up wrong? Can someone please help me with Replicanto? What did I get wrong here? I had the market order. I have it all set up. Properties. I don't know what I did. Like, I don't know why this keeps fucking happening. I don't get it. That's so fucking annoying. And it's only on a couple accounts. It happened on none of the MFFs. It happened on 2 of the Lucids, and it happened on 2 of the Tradeifys. Dude, I've read this user guide. I've tried so many fucking things. What is going on? Like, what could I possibly do to fix this? You didn't receive your TPT. Everyone who won the TPT account, there was only one that your email wasn't registered, but everyone else, it's already in your credit bank. If you won a TPT account on Friday, it's already in your credit account, your credit bank on TPT. I got the email confirmation yesterday. There was just one email account that wasn't pre-registered on TPT, so there was no way to send it to you. So I guess, are you the person who didn't have it? 5 people won TPT accounts. Out of those 5, I am 100% positive 4 of them are already in your credit bank. There was one person whose the email they gave me was not on TPT, so they can't give you a credit if you're not there. It's a common bug with the copy trader when you edit the order after it was placed. So it's because I edited it. Well, hang on. Duplicate in a new tab. Let's see if we can actually look at the trades. See what happened. All right, let me look at data series. Let's do text and markers. All right, let's dive into this to see what happened. Oh, Jesus. All right, maybe the text. So it hit the target, entry 5 and 5, hit the target, entry, target, target, target. So maybe it wasn't 145. Was it 144? Yeah, like what happened here that I had to do something different? And why doesn't it auto close? Because I set up the properties on this to auto close. Properties. Yeah, flatten the follower if it becomes out of sync. I mean, I have flattened for everything right here. Unless it was a weird race condition that I tried to flatten and then the order got hit and it flipped the other way. That might have been what happened. Was there might have been a weird time delay in between the copier and the order getting removed. So maybe that's what happened. Maybe the SIM account got its fill, so all of this hit, and before it pulled the order, it hit the other order and went the opposite way. Oh, I do see it in my credit bank. Well, that maybe teaches you to, like, as you said, I don't mean to air out dirty laundry. Then don't do it publicly. Just DM me. Because, like, now you're in an awkward position. I'm in an awkward position. So you came basically accusing that I don't run the giveaways properly, accusing also TPT of not doing it. So then you choose a public forum to talk about it when literally you have my DM. Like, I had to DM you to get your email. You had to DM me. Like, we have DMs back and forth. So think about that. Why wouldn't you just DM me? I swear, some people just don't fucking think. So now it's awkward that we're addressing it. It's doubly awkward that you thought you were airing dirty laundry, but you were on the wrong side. So I did what I said I was going to do. TPT did what they said they were going to do. You thought it didn't happen, but your first thought was to try to talk about it publicly rather than just fucking DM me. Like, I guess I was just raised differently. I guess I just grew up with a different social skill set or social understanding of how to behave. No, I wasn't accusing. Once again, you have my DM. The only way I got your email was because we were DMing. Like, it's not like rocket science. We're not like trying to like socially engineer. Like, I guess it's really not. People love the drama, I guess. I knew it was questionable whether I should send it in here. That's how I think about drinking and driving. After I'm plastered at a bar, I just feel those keys jingling in my hand. I'm like, this is questionable, but fuck it. I'm going to rip it. During development of my copy trader, I was running into the same issue. TP and SOs were copied over to the follower accounts, but when you drag it to the existing order, it would have issues. Well, it had the right order. Mine was a race condition because it did update to the 51. It got this fill at 851 right there. So it did. Well, it did mark it out. So then why did it? It had to be, I believe it was a race condition between how I have the property set up on Replicanto, because it didn't even happen on most accounts. We'll see. I just hope it doesn't fuck me over in terms of, but then all of these seem roughly right anyway. I'm just confused why it got into a live position when it shouldn't. Like, it should be shut down. I mean, I guess I quickly went over here to flatten everything, but If I have to be paying attention to that in the future, that seems like risky. The way I fix it in the issue of my code is not only flatten all, but also to remove pending orders. So that's where I think the race condition is between, I think somewhere in between the removing of the orders and the flattening. I think we were like right in that awkward delta where the orders weren't removed, but the position was closed. And then it hit so I think it was a race condition. Nibius is climbing ES. What are we doing here? Do we get another rejection? We ran right back up. Right back up into this zone. We're right in this region of resistance where it was smacked earlier. Maybe I should have taken that trade. Do I like the trade now? Fuck it. Never mind. Wrong account.
Order filled.
All right. Same thing. Just trying to lock in $100, not 1,000. Locked in the 100. And all right. If I'm curious. Okay. So it's at 65 right now. Let's just do a quick little test. Let's move it down to 61. So it was at 65, trying to update them all to 61. Let's look at the order over here. It's not going to show it because I have a market order. So the orders aren't even there because I have it set up right here. I have this that basically when the sim account gets a fill, it market orders out on the other ones, as you just saw. So it's not actually even the pending order. So what the hell would the race condition be? Yeah. So because I have market order toggled, the only orders pending right now, right here, it's just this. It's just the sim account. And then when one of these gets hit, it market orders out of the rest. So then why was there? It must have been. Oh, why the fuck would that happen then? It should have just market ordered. Why did it take time? I don't know. It doesn't make sense to me because it's some form of a race condition, just not the race condition I guess I thought it would be. Oh, we're running into some sellers here. Yeah. Right when we ran into that, you can see there was not only structurally right here, ran into aggressive buyers that got absorbed, ran into aggressive buyers that got absorbed. You could kind of see it on this delta map over here. Just all this absorption, not enough follow through. I think this sends us back down to, what is that? The VWAP. Yeah, VWAP. This yellow dotted line on the screen right here is the volume weighted average price at 55. And then obviously I am front running it by a little bit. Oh, wait, shit. I'm over. Okay, shit. Positions.
Order filled. Order filled. Order filled. Order filled. Order filled.
Okay. So I closed out the tradeifys because I was already beyond my goal. I needed 1,200 and I've exceeded it. So I'm going to have to give some of that money back today. But 1,200, 1,200, 1,200. So max out the tradeifys on the day, a little bit over 1,200. And I'll have to knock these down to 1,200. I'll just trade some accounts until I, pay enough commissions or something. But I am over my goal because of the 40% consistency. So we're done with Tradeify. I did disable it. And just to be extra safe, let's turn that account off. These other ones have a higher consistency rule at 500, which we're really not that far away from. 1,500. Okay, so disabled that. And we'll see how it goes. RuneScape click speed there. I knew I was trading on all those lobsters for good reason. Hang on. So far today, let me fast forward this to 11. Not much has actually happened. clear resistance. So we hit resistance at 937, fake out breakout at 948, and then again at 1011. But let me show. So this is the geometry, just running into resistance, basically equal highs with a fake out. But then let's overlay that with actual right here. What happened? Aggressive buying got smashed. Aggressive buying got smashed. Aggressive buying right here. I mean, it started at 1009, continued to 1010, went to 1011. Right there, aggressive buying, aggressive buying, aggressive buying, right at where it was before, just not enough follow through. So whatever it is, when you have aggressive buying and there's no follow through, by definition, it has to be bearish. It was just all these aggressive buys were absorbed. And then when it's getting dumped on, okay, that's when you start to set up for the next level. And granted, it is catching itself in the 880s. That's like another interesting area of selling absorption. Look at all these wicks in the 880s. You kind of have to be on the 1 minute to see it. If you're on a larger time frame, the next evident level is 860 to 850 down here. So that's been not only the geometry setup, that's been the order flow. And then the last thing we haven't really been checking is the options, which this is not updated. So here's a look at options flow. We're at the 900 rung. This is the point of control. So we did get this hero flow alert at 946. We saw a pop. We then got hit. It was bearish, starting to recover right now. Mag 7 is looking bearish. It's just been trending down. Looking at the NASDAQ, popped, pulled back, going flat. So NASDAQ not telling us much. Mag 7 telling us bearish. S&P 500 telling us was bearish, but maybe now going back to flat. So we'll call S&P 500 and NASDAQ flat, and the Mag 7 is clearly leaning bearish. So we're looking at options flow. We're looking at the order flow. And then, of course, we're also looking at just the geometry of the setup. But yeah, I mean, I have this support drawn at the extremes, but you can see that there's like a whole nother bunch of wicks right in here. And this, we're just playing this range of basically 950 to 850. It's a 100-point range. How is the gamma set up? Call wall 780. Hedge wall 7720. I mean, there's negative gamma above, there's negative gamma below. This thing definitely has the capability of going anyway. Patience. I'm still in a half short position. I locked in half and I'm still in the other half. And I don't know if I want to do 936. Right now, I have it anchored to the previous high, but I'm still feeling pretty confident about this. I am front running VWAP. You can see I'm trying to, well, I might actually need to watch this because I'm looking for 1500. So this will lock in 437. So this is actually a slight overshoot of what I need. But here, let's just see. I'm watching these closely. As closely up, we're at 1500 there. All right, I'm gonna have to lose some money on some of these accounts, but then other ones are kind of going. What accounts are they?
Order filled.
44 is good. 43. Nope, it's like right.
Order filled.
43 is good. I'm trying to snipe them as I see them above 1500. Maybe I should go to the 100, the 500 tick on this. Which one am I on now? 42. I'm on this one. I'm kind of like, we were like roughly in that zone, closing them out individually as I see them cross the target that they need. And hopefully it doesn't mess up the trade copier. Seems like if it pushes, I think I need it below like 68, 67, something like that. We'll see if I can. I was able to snipe 2 of them where I needed them to be. But now it's not quite going the way I need it. Almost hit the target. Got to 64. I had the fill at 61. Is it just another support bounce? Appears to be. Yep, came right in here. I was looking for a little bit more because of VWAP. It got to 64. I was looking at 61. Maybe I should have cut it at 82, but it also could just get rejected right here. So I'm going to give it a second. I have time. 1 minute pushing, 5 minute, 10 minute, 30 minute trying to save itself. 1 minute, 5 minute trying to save itself. That's why we're bouncing right here. But hang on, back to this. No, I'm off by 250. I was going to, if I was riding a position, if it touches VWAP, I'd move my stop to break even. Obviously, I'm taking my profits before that. But if you are still scaling out, that's how I would personally handle it, just because the chance of ping ponging between the two VWAPs is high, and I'd rather not be caught up in that. So if I'm looking to take all my profits before that, because simply I'll just be above my targets on the day. But if I still had room to trade, room to run, what I would do is on a touch of VWAP, I would move this stop to break even and then just try to play the crack. And if I'm wrong, you get knocked out for break even. I think it may be a sync issue if the lead account sells 1. No, because I'm doing the exact match. I'm not doing ratios, exact quantity, which is why I'm trading 10 SIM. So the 10 SIM go to 10 MNQ. So I'm doing an exact quantity match with market orders. So I don't think it's that one. It was some sort of race condition that I think only exists if I like look at the tape and find it says flatten if you're out of sync. Yeah, and I think that's what happened, something with like the market. But how the question is, how is it getting out of sync if they're market orders? It's not like, oh, the fill didn't happen because it's MNQ, which moves slightly differently. It's marketing it out. Like if the SIM account, the market order to get in or to get out should then just trigger the market order. So that's not right. Like, how would they be out of sync? And then they did get out of sync, so why didn't it flatten it? Like, I think maybe the bigger question here is, like, as you saw, it got out of sync. Some of these positions ended up still remaining live, which is then the fair question of, but why? If out of sync, it should have flattened everything instantaneously. Why did I have to flatten it? All right, here we go. We are testing once again, coming up to this region of resistance. Rejected, fake out, breakout, rejected. I'm curious if it'll just get smacked again here. Not much is going on. It's very rapidly becoming boring. How much does Apex owe you? I'm waiting on $1 million payout. What are the reasons for the non-payout? I don't know. I haven't been able to have a conversation with the company about it. So just waiting. I'm assuming it's KYC, AML, that type of stuff. I'm assuming they're reviewing every single one of my trades. I thought that process would be done within 6 months, but I really don't have an option to do anything beyond wait. It's like trading itself. I just need to be patient. I need to sit here, and I just need, like, yeah, it's no different than actual trading. Patience, patience, patience. I hope sooner rather than later, I can talk with the team and get it all figured out. Was it multiple 100K payouts or $1 million payout? $1 million payout. All right, we're starting to show a little bit of life in order flow here. We're right back. I'm watching this zone here. Actually, let me get ready in case I need to add to this. in case I need to add to this. What is this? The value. Yeah. All right. So 950 is, for those of you who look at volume profile, it's the value area high. Interesting. It ran into sellers again. Ran into sellers, ran into sellers, ran into sellers. Or no. Sorry, I'm misspeaking. Buying aggression, no follow through. Buying aggression, no follow through. Buying aggression, no follow through. Buying aggression. The question is there going to be follow through? But there were just a bunch of sellers there. Someone tried to knock it, and it actually caused it to pop. Look at all these sellers at 1024 and 1025 that it just popped. So interesting battle. We are above both VWAPs, just so everyone knows. Has anyone else had to wait over 6 months that you know of? I know of one other $1 million payout that had to wait 6 months. Maybe it wasn't $1 million, but it was multiple six figures. I think most of the other ones were in the realm of 3-ish months. It depends. Like, there's so few $1 million plus payouts that it's not like there's a huge amount of data to go off of with this. I would at the very least try to talk to someone. I can. The issue, to my understanding, is that there's very few people at the company who are allowed to make any decisions as it relates to this. And it sounds like those particular people are busy with a lot of the other like business aspects, and they're just busy. They just, I guess, haven't had time. Trust me, I've tried, and I know a lot of you disagree with me on this. I have a gut feeling that it's going to all work out. I really do. I really, really do. I'm just putting, I don't know. I'm putting my faith in Apex to, I guess, get this all figured out. And until then, all I can do is have patience. Maybe they don't have the money. I mean, I think they paid out $30 million last month, so I don't think it's a money issue. I hope it works out for you. I appreciate that. Did you do the 6 payouts before the big payout that's pending? Did 5. You only have to do 5. We are right back to VWAP here. RTH VWAP. Do I want to add in another position on this one? I could have gotten out for break even, I suppose. I'm just watching this VWAP one. Is it just the same as before? We pop up and it fails. 900 is the point of control, and it's also close to the value area. Watching this one closely. Where did that go? Where did this go? $924. Do I want to add to this? I kind of do. Fuck. Never mind. Right here. Look it. It's not doing it. What the fuck is happening?
Order filled.
Here's the errors. I don't understand this.
Order filled.
See, it's too delayed. What the fuck, dude? What the fuck? Why is it doing that? You have follower accounts disarmed by Replicanto for the leader sim and instruments to rearm. Okay, you should rearm. And it was because of the something. It fucked me. It absolutely fucked me. All of these accounts were passed. You saw that they were above the 1500. Something I don't, it's something with the something is getting funky with it, and I just don't get it at all. 44. And it might be fine with these evals, but if this happens on a funded account, it can actually cause me like legitimate issues. Someone said trade syncer time. Is trade syncer better? Is that an easier way to avoid the bullshit that I'm currently dealing with? Can I get I think I tried trade syncer once, and I honestly can't even really explain why. I just like, I thought Replicanto was better, but it seems as when you're doing these cross trades, it's bigger issues. Try trade copia. Folks in chat, what's the best trade copier? I've been using, it's flawless. What the fuck just happened there? It closed a random trade. Like, why? Why did it get into a position? It does not fucking make sense, man. Target, target, target. Then what was with this close a second later? It does not make sense. This trade right here, the close, it should have never had anything to close. It hit its target. Why the fuck did it think it was in a position? 113. Dude, I don't. I'm going to lose my mind trying to figure this out. Yeah, this close. Entry 6 and 4, so that's 10. Target. I must have been in 3. This one right here, this close makes no sense. It should have been closed out. Target 2, target 2, target 2. It knew it had target 2. I think the close is flattening out. Yeah, it is. So this is my Replicanto property settings of flattening out if it gets out of whack. The question is, why did it get into the other position? Why did it get into the opposite position?
Order filled.
I'm going to watch it over here. We're going to see what happens. We're going to do a little bit of real-time analysis. So right here, there's only these orders for the SIM account. We don't have other pending orders, so it's not a race condition there. What happens is when this hits, if it hits, it should just mark it out right here. I have it set up as market only. So when the SIM account gets it, it should prompt a market order on all these other accounts. Which, fuck, that hit 62 and mine was at 59. Let's see. If it ever, actually, I should maybe pay attention so this doesn't run against me. Could have just been a VWAP bounce. I guess I spazzed out, but I was just trying to get a trade in so I could look and see what happens. But if the SIM account closes only one contract, it's not closing one. The SIM is not closing one. It's an exact match. It's 5 and 5. You could see the 5 and 5. And SIM accounts get the theoretical perfect fill. SIM accounts aren't based on liquidity. SIM account is just saying, did the value hit or not? It doesn't, when you're trading on a SIM account, it has nothing to do with like the liquidity at that level the way it can on prop accounts. On a SIM account, it's if the level got hit, you get the perfect fill. Is there an option on your copier on each tick? No, on the copier, it's a time delay. So I put it to what I perceive to be the lowest of just 1 second. Someone said that's from a Trump tweet. All right, let me move this up. Well, now I might screw myself because the trade, I literally just like rage quit and threw in that trade for no reason. And now it's costing me money when I was like $150 away from passing all of these, which is so fucking stupid. Truth Social. Let's see what people paid $100,000 for. The USA has total control over the Strait of Hormuz. I think we will keep it. Our naval blockade is being called by everyone a wall of steel, and there's nothing Iran can do about it. They have no navy. They have no air force. The remaining soldiers are unpaid. The IRGC is decimated and fleeing, and their leadership is uncertain at best. They have no money. Their country is, quote-unquote, shot. All they have is fake news at 300% inflation and getting worse. Iran is all talk and no action. The bully of the Middle East no longer. Praise be to Allah, President Donald J. Trump. Well, Matt, that 1 second made the difference. You are not wrong. I'm just trying to understand. So the close, which now this trade is getting, like, I shouldn't even be in this trade. This is costing me all the fucking money I made. Like, this was a horrible trade. This was completely, like I said, I rage quit from whatever the fuck's going on. This copier is going to cost me money. It should have all been fine. Like, if everything worked, the issue is I had the money. They were above the target, but then because they got into other positions, I could show you right here. This fill, I'll go to the 100 tick, so we're all on the exact same page of what fucking happened. These were closed out above the profit target that I need when this loads. And then it got into the opposite position. I don't know how. I'll show you right here. Like, this is how, like, I passed these tests. I passed these tests right here. Boom. I got the fill at 931.14. Target. Somehow it gets into the opposite position and it closes it out for a loss or something. I guess it must have been shorter. Something happened here, but obviously a loss that got locked in. This close was from the trade copier. That makes no sense because how did it get into a live position? Right here, target. They got filled. There was no more. What the fuck is going on? This is beyond infuriating. So at this point, I was probably at 1,600, and then this takes a loss, and then I fast forward to here, try to figure out what was going on, and I got into a new position that is now costing me money. That wasn't a good trade at all. God, that's frustrating. Yeah, so this is where I spazzed out and took a trade for no good reason. And this is the close that makes no sense. So this is what's weird is, okay, so on some of the accounts, on 44, it shows the target and the close, and it was fine. So it hit the target, made the money, reversed the position, closed it out for more money, which is how it got up to 1,700. However, if I go to this one, the target never marketed, or so that's the issue. Is it never actually got it, even though some of the accounts did get it right here. Boom. 1031.14. Target somehow still messed up, reverse position, made more money, but still should have never been in it. And then looking at this one, why the fuck's that happen? It just gave no fill. It never marketed it out. And then this is bullshit. This is such incredible dog shit. Fuck this. This is so stupid. I find very few things to be more infuriating than, like, trading in itself is extraordinarily difficult. It just is. And then when you actually do it right, but then it somehow gets fucked by something out of your control. I have this set up right. I have no fucking clue why this piece of shit Replicanto is fucking me over. it's so fucking frustrating. Like they were all passed. They were all at 1,500. And then the sad thing is if this fails, I mean, how many accounts is that? That's going to cost me like $1,000. Jesus Christ. Pretty simple. The SIM account gets filled quickly. The following accounts don't always get the full fill. They didn't get any fill. It didn't even, it's a fucking market. Like, what are you not understanding? It's a market order. If the SIM account gets a hit, it causes a market order on the other ones. My issue is the market order never got sent. The market order is saying, give me a fill at whatever point as soon as the market order is placed. Like, it's just people here talking about shit. You just don't know what you're talking about. There was no market order. I don't know what to tell you. There was no market order when there should have been a market order, even though market order is clearly fucking enabled. I lost 1,100 today because of trading view, ignoring my stop loss. Well, that's weird if the stop loss was like on the chart. It wouldn't let me close the position during that drop. I understand if there's liquidity issues, but I had a market order. It was not a limit order. It's a complete, like a limit order is saying like, I'm only willing to take this value or better. A market order is saying, just get me out, just close me out. So the way I have mine set up is on the SIM account is if a profit or a risk is hit, it market orders out all of the other ones. That's it. So like the SIM got hit. We all right there. The SIM clearly got hit at 1032. As soon as that was hit, it should have sent a market order for all the other ones, and it worked on some. I can show you right here. It worked on, I mean, I've already showed you this right there. Target, boom, 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 somehow kicked it into a different position, which is a completely different problem. But then when I switch the account, nope, 42. There's just no market order. It does not exist. Right here at 1031 on this account, it worked. On the MFF accounts, no, didn't work on 45. Randomly worked on this account. It's just, this is fucking insane that I'm dealing with this. Honestly, this is probably why I fucking hate trading MNQ, because the copy trading with it is apparently fucking abysmal, and Replicanto should be fucking ashamed. You got a partial fill. Jesus fucking Christ. There's no goddamn, like, what is going on that there's certain members in the audience who just don't fucking understand what's happening here? Money Mike Official, are you dumb? Like, I just showed you evidence on the chart that there's no goddamn order whatsoever. And you're like, it's a partial fill. There's no fucking order. Like, dude, I swear, some of you are actually too stupid to possibly be trading. Like, you should be banned from trading because it's just going to cost you and your family money. You're too fucking dumb to trade. Like, evidence in front of your face, fully explained, shown, and then you still don't understand what happened. Like, holy fuck. Like, truly, some people are too stupid to be able to trade. Like, I actually think not everyone should be able to trade. Like, I think there should be laws, rules, and regulations that, hey, we just got to protect some people. Like, I really deeply believe that. Just some people, they don't have the capacity. Order books are a thing. I swear to fucking God. Order books. It's a fucking market order. Jesus Christ, you're stupid. Even this, order books are a thing. No fucking shit. It's a goddamn market order. The liquidity within the book doesn't matter because it's a fucking market order. Oh my God. People are so fucking stupid. People are insanely fucking dumb. I want to see if I can dive into the play-by-play of what happened here. Where was it? Filled orders. I'm going to have to die. Like, this is going to take a deeper analysis, I guess. I don't even know what. 41. Sell 4, sell 6. So that's the 10. Buy to cover, buy to cover, buy to cover, buy to cover. It hit on 41. So right here, that makes sense. 4 and 6 is the 10 to get into the short. You cover half at the profit target, and then the other half got covered. Okay, that makes sense. What happened? Is there not a time? I need to add the time one to see, because like this is a discrepancy of seconds. Anyway, I think that goes without saying that your boy's on the market for a new trade copier, because there's no fucking way that I'm dealing with this. So if you are listening and you run a trade copier and you want a new affiliate, hit me up. If you guys as traders have a personal favorite, I'd rather use the ones that you guys are already backing up and saying is good, because I mean, Replicanta worked well for me when I wasn't doing cross trades. But now if I have to do cross trades, this is fucking hell. Did you check for the, oh my God. I think we have to drop it, because if you don't understand fully what happened at this point in the conversation, you're not going to understand it. You're just, I think we have to drop it. If you're still like asking questions of, I mean, these questions are just fucking dumb. It's the yen. Honestly, that's the most reasonable thing that I've seen related to this. It probably is the yen. It probably is 100% the yen. And then this is fucking lagging. All right, and now I'm bricked. Yeah, I mean, it's posting the sim orders properly. Market only. Maybe I don't want to do market only. Maybe do the market only is like what fucked me. I don't know, but I would love for this to vomit just so I can. But now the target that I need, what am I at? 300. So I need a total. Yeah, this is, I need it to drop to 59. I need to make 10 points on this. And unfortunately, because VWAP's trending up, I need it to slightly break VWAP, which it's possible if it breaks 900, but this is, we're just range bound. I mean, all these shorts at good short, good short, good short, good short, good short, good short, good long, good long, good long, good long, good long. I think one of these times it's actually going to crack. Today is my opinion, but we'll see. All right. Hopefully, well, no, is this about to go wrong again? For all I know, this is about to fuck me again. So, okay. Everyone, we're watching the positions. We're watching this in real time. All right. I'm going to make the font even bigger so we can all read it together. We can all see me get screwed together. Okay. So the sim account right here. That makes sense. They're all there. These are all positions. Here's the orders. The orders are just for the sim account. Here are the positions. Maybe do I turn off market only? Dude, if I somehow get lucky enough that this flushes. All right, I'm turning off the market only indicator. Maybe that's what's screwing me up. So I just toggled this off. But then now there's no order. So that's not right. Right? There's no, yeah, because there's, okay, so it didn't add the orders. Okay, so what could I possibly do? 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 What I could do is cancel all the orders, set this to none, and then go buy limit 10. So that's on the sim account. And then if I switch it over here, okay. So now there are limit buys. So there's quite a few more orders now. Yeah, maybe it was the market order bullshit. Let's see. If it's a VWAP bounce, I'm fucked. When is a pump and dump? Be careful. People are saying Wendy's is pumping. That was one we were looking at, a Wall Street Bets subreddit, pump and dump. Yeah, it's up 13%. Just got halted. There had to be some sort of news right here. It was randomly at 10:49. It took like 1 minute. It actually took not even 30 seconds for that to happen. Do we have any news on this of what happened? So it's a circuit breaker halt. Went up too much too quickly. Oh, right here. Investor Nelson Peltz prepared to bid for the company. Okay, so it's rumored that maybe it's going to be a buyout. So that's what happened. The bots reacted to the news. This does not seem to be associated with the Wall Street Bets pump and dump. It looks right here. Nelson Peltz prepared to bid for Wendy's. So it's a potential buyout is why it popped. And if you happen to be trading it, just so you know, it's a 5-minute halt. So it halted at 10:45. It'll start trading again. Or wait, when did it actually halt? 49. Okay, so it should be trading again somewhat soon. Unless it's pending news. If it's a circuit breaker halt, it's 5 minutes. If it's pending news, it's till when the news comes out. But it got halted at 10:49:30, so we should be coming up 54:30. So let's see if it actually starts trading again. Yep, a circuit breaker halt. It's trading again.
Order filled.
All right, that one worked because I turned off the market only. I had the limit orders. Wow, that's fucking frustrating. Anyway, it worked, but beyond dealing with that and dealing with some of the fucktards in the audience, I'm just happy I wore my Buffalo shirt. If I didn't wear my lucky Buffalo shirt, who knows what today could have been. Who knows what today could have been. So I more than maxed out all of these accounts. I maxed out the 1,200 on Tradeify. I maxed out the 1,500 on Take Profit. I maxed out the MFFs. I maxed out the Lucids. The Lucids I actually have to give money back on. I made too much money on the Lucids because of those fucking shenanigans. 44.
Order filled. Order filled. Order filled.
All right, I knocked this account down to 1,500. It was at 1,700. I'm going to do the same thing on this one. 43, 1718.
Order filled. Order filled.
All right, that should be enough. Knock that down from 1,700 to 1,500. So let's see. Let's see if my plan worked. Let's see. Someone just asked, is that allowed? We're about to find out. We're going to find out today. All right, MFF in progress, upgrade. It did make too much money. Oh, wait. It's just because the trades didn't load yet. 100%. Yeah, so it just didn't load. So I just have to wait a little bit. Yeah. Okay. The MFFs are perfectly fine. 1520. That's what I made yesterday on them. So I just have to wait for the trades to load. Same thing with the Lucids. Tradeifys, I need to lose a little bit of money there. And TPT, I'm going to knock that down to just below 1500. So your boy's done. Your boy's done. I'm not going to trade those accounts today because I'm worried about the trade copier. So if you have a trade copier that you think is the best, people said trade Copia and other people said trade Sinker. Does anyone, what ATM setup did you use for rapid fire sale? No ATM. I just bought and sold. I hit the buy button and the sell button as quickly as I could. No ATM. ATMs would put up other orders and you don't want other orders to get hit. So just no ATM. Does anyone have trade copier suggestions? I saw trade Sinker and I saw trade Copia. Does anyone else have strong opinions on this? I feel like I should just make my own because then at least I know what's going on and I can dive into it. Does anyone have any suggestions? A1, you're saying trade Sinker. Apex trade copier, I've used it for years. I use it, but I don't think it's good on the cross trades. I've had issues there. Randy, you built one in Claude, simple and it works. Maybe I should build my own. I stopped using Sinker because it got different accounts out of order too often. TradeCopia is a local app similar to Replicantico with built-in hedge protection. Oh, so maybe I should do TradeCopia instead. But I thought TradeSinker also had built-in trade protection. Not much slippage as well, less than others. Well, the copier is not what determines the slippage. That's a different problem. Interesting. All right, I'll have to look into those and see what's going on. But ow, fuck. Smashed my hand off my desk. Yeah, okay. I passed the 5 accounts on MFF. I passed the 5 accounts on Lucid. I passed the 1 account on TPT. I have a lot of past TPT accounts. I'm just waiting for them to go to pro. And then I maxed out Tradeify, and hopefully I'll pass those ones tomorrow. But my project for the day is to figure out what trade copier I should be using. But beyond that, shout out to TPT. Shout out to any of the firms. Use code Goonie if you want to support me. If you want to trade with me, GoonieTrading.com. If you have any questions on the software that I use, whether it's Spot Ammo or DeepView or Bookmap, feel free to shoot me a question right here if you have a need to get a hold of me on the contact page. So that's the summary on the day. Before I let you guys go, I do want to let you know I feel pretty strongly that we're still going for the downside gap fill on the Qs. Actually, we just tagged it on that. So on this little puke here at whatever that Trump update was at 10:31, we did perfectly hit the downside gap fill. So actually, scratch what I just said. I think we're going lower from here because it's still, I'm looking at options flow. I'm looking at order flow. I think the real target is SPY, the green or red test. Mag 7's not looking the best. NASDAQ's not looking the best. SPY's not looking the best. Yeah. If I had to guess, my guess would be the green to red test on the S&P 500, which I'm looking at 730. We're trading at 743. I'm looking for it to crack this cloud, the 5-minute cloud, and come down to this zone right here, 730, 728. Somewhere between 730 and 725 is like what would be my next reasonable target for day trading. Anyway, that's what I have for you. Shout out to TPT. Fuck Replicanto. Shout out to everyone on the Discord. Shout out to you guys in chat. Shout out to making gains on a Lucky Buffalo Shirt Wednesday. And other than that, stick to your plan. Look at order flow. Look at options flow. Look at areas of support and resistance. Stick to your plan. Trade the appropriate size. Get yourself a cat. Can you guys even see her? You guys can hang on. Shh. We won't wake her up. There's Piper. She wanted to say hi and bye to all of you. Get yourself a chief investment officer that's as dope as this one. How you doing, Piper? All right, that's what I have for you guys today. I'll catch you guys on the flippity flip. Peace.